I'm going to hand over to Tom Cregan. He's our Managing Director and Group CEO of EML Payments.
I tried to get rid of that video, but I was told to keep it. That was the surveying our domain of payments, looking out at the world. Thanks everyone for coming. Fantastic event, fantastic location, and really probably about time that we did do it. And I'll talk a bit about the genesis of actually how we came here today in a few minutes. Before I do that, I'm going to do my thank yous in advance, which could be dodgy if things don't work properly during the day. But I'd really like to thank all of the EML team who are here. We've got 10, 12 EML team. Be standing. As I said, we decided to have this event in May, and my contribution was to have the idea and to suggest it to Rochelle and to turn up today. And 1,000 hours has gone into creating this thing, not from me. So thank you to Rochelle and the EML team. Thanks to all of our speakers that are coming today. They're all CEOs of their businesses. Times poor, people are time poor. So I thank every single person who's come today to give us their time to talk to our customers, our stakeholders, our investors about how we work with them, why they work with us, and so on. So again, thank you from the group. And also thanks to other partners today, Global Payments, who are doing the credit card processing for the coffees, Seventh Beam, who we work with as our app partner, and Prodigy. Where are the Prodigy folks? They won't be able to see you all at the back here. Wade and his team, Matt, they're our marketing agency in Brisbane. Fantastic bunch of people, great work. Thank you guys, well done. On to the guts of it. In 2012, EML had a GDV of 60 million. We had one customer, being Edge, or Nick, who was in the front row here, so here he is. We were operating in one country, being Oz, and we obviously had one currency. So that was back in Jan 2012. This was the feedback I used to get from the market and from investors as I walked around. You guys have done really well. I like your technology, but what is it you do? Is that what PayPal do? Is that what the banks do? Is that what MasterCard, the Visa do that? Are you an app developer? Are you this? Are you that? And we were early in the stage, right, of communicating exactly what we do. But that came up all the time. And I think we don't have any real comparable competitors in Australia either, so it makes it more difficult to compare us to other businesses. Go forward now, the volume's 100-fold what it was 6 years ago. We've got 1,200 customers. We're in 21 countries. We've got 8 currencies. And this is the feedback I get. You guys have done really well. I like your technology, but what is it you do again? And maybe I'm destined to hear that forever. Maybe in 5 years' time, I'll still be getting that same kind of feedback. But we do operate when you operate in lots of countries and lots of different verticals, and you're supporting partners, whether it's in the gaming industry, in social payments, in retail, in salary packaging. For us, it's the same technology, different industry verticals, different industrial applications. Sometimes the market looks at the application, not the technology. So while you're doing a lot of things, it looks very confusing. But actually the technology is the technology, and our partners are the ones who are really propagating that technology. I had a chance meeting, it was a very chance meeting actually, with Adam in the front row and Shane Guild, who's here somewhere. Where's Shane? In May. Chance meetings over beers, which are often the best chance meetings, where the Canaccord guys asked Adam, they said, well, what's your business? What are you doing with EML? And he said, well, EML is my payment technology. So, I can't run a payments company without actually having the ability to manage the technology behind it. And what am I doing? And he then spent 20, 30 minutes talking about impact pay and the whole strategy of impact pay, the fact that it'll start locally, but obviously we have plans to take it internationally. And he was very passionate, but you'll see him later, he's a very passionate entrepreneurial person, right? So it just struck me in that moment that when we do presentations to the investment community, they can be pretty bland. We're up there for 20 minutes, 30 minutes talking about our customers, but how much justice can you give a company, right, out of 1 out of 1,200 in 20 or 30 minutes? The answer is it's pretty difficult to do, right? But it's not difficult for the founder or the CEOs of these businesses to do it because they're living it every day. So they're far more passionate and they're going to do a far better job of selling their company story. And indirectly, that does a better job of selling our story because people will then say, that makes sense, I understand it. So that is my entire goal for today. Hopefully, after hearing how Apple Pay and doing vouchers and gift cards on Apple Pay, Nick will talk about how he thinks that will really change the face of the kind of gift and incentive market in Australia. You've all got them, as Rob mentioned before, so you can use them. And as you use it, you go, I get it, makes sense. As you use a Frank Green cup today or at a later point in time, I get it, it makes sense. Payments is a bit esoteric, right? When you're doing billions and billions of volume, sometimes it's hard to get your hand around it, but using it then becomes tangible. Tangibility means that understands it becomes a kind of a self-fulfilling prophecy. So at the end of today, if you can't say that, I've horribly ballsed this day up. So hold me accountable if that doesn't happen. That meeting and really today led us into a lot of work on our mission statement and our vision as a business. And you can read that for yourself, but essentially, it's we create awesome, instant and secure payments, which obviously they have to be. Right? They have to be secure and they have to be instant. The important bit is that they connect our customers to their customers anytime, anywhere, wherever money's in motion. So if there's a payment of flow of money between A to B, 24/7, we'll be in it if we can connect our customers to their customers. And this is our mission. This is our commercial strategy. This will drive our financial strategy. So as you see new releases from us or new announcements, think of that, right? In terms of why would we be doing this? It's to achieve that. It's to achieve that end. The Americans in the room, of which there's probably only Brandon and Rich that I know of. Go America. Oh, 3. They love the word awesome. Right? Everything's awesome, awesome. Australians look at it and go, that's marketing wank. But we actually take it quite seriously. We think that we exist to create products that are awesome, but they don't have to be awesome for the people in the room here. They've just got to be awesome for the people using it, right? So think of that as it's kind of a bifurcation. It's not what you might think is awesome. You might think it's quite average or quite ordinary in some respects, but our customers don't. So if I think of gaming, which obviously people know, they're familiar with our products in gaming, certainly in Australia and in Europe, it took a 3-day process to get paid your winnings to a 3-second process. We would think that's an awesome innovation. We've issued over 500,000 cards now to gaming customers in Australia alone. The end user, so Ladbrokes or Bet365 or Neds is our customer. Their customers are in fact the punters, the users, right? The card, what it allows their customer to get is instant access to payouts. I mean, that's obvious, and it gets them the ability to recirculate and make additional bets, and it's anonymous, right? Anonymous to their main bank. That's what their customer gets, right? What Ladbrokes gets is a bunch of loyal users that are engaged, that are on the website 10, 12, 15 times a month. What does that do? It drives loyalty, it drives lifetime value. So there's 2 customers there. There's our customer and there's their customer, right? And we're serving both. So our relationship with those guys there is propagated because of what we're providing to their customer. If their end user, if their customer didn't find it useful and didn't find it awesome, we would have none of these customers, because why would they be working with us in the first place, right? As Sam will talk about in the US, which is a program we launched yesterday, not only does it have payout capability, but it actually pay in. So the money that is going into the gaming companies is coming from us, which for a gaming company is pretty awesome, because if you can't get money in the door, that's problem A, right? If you go beyond gaming and you think about Frank Green, other than just being great aesthetic, industrial design and branding and so forth, you know, they've got I don't know how many patents on the technology, both from a payments point of view and a product point of view. You know, but if you're managing kids and you've got 25 things on the go, and you can have your cup, and you go bloop, and you pay for your coffee, that person might consider it awesome. Might not be you, but you know, might be that individual finds it awesome, and that's why they continue to use it. In the salary packaging world, and hopefully other industries, our loyalty programs some that we source directly, some that we work with Incentive Pay, some that we work with other partners, allows you, if you're a nurse, if you're or a not-for-profit worker and you've got one of these cards, you're walking down the street, you're getting pushed an offer. Hey Rochelle, Nando's, 200 metres on the left, between the hours of 12 and 2, $5 off, right? Geolocated, real-time offers to your phone. Now, again, we might not think that's awesome, but if you're paying $55 a year, you know, for that card, and you can now earn $55 back, if not hundreds of dollars back, it becomes a pretty awesome proposition, right? Not just technically, but just financially. The more of these things we invest in, so you can imagine, again, our customer is Macmillan's, our customer is Access Pay, EasyWay, and so forth. Our job is to make that product that they offer to their customer, right, so compelling that that customer never wants to go. Which again, so I just keep harking back to our mission statement, is we're not a loyalty company, right? That's not what we do. But by building that kind of functionality with other partners, we connect our customers to their customers, and in so doing, we build out our business model. The pays that we talked about before, and I won't steal, you know, Nick's thunder, but in certain verticals, in certain industries, physical cards just don't work. You know, if you're in a fast food location and your goal is to get people in and out the door, queue productivity. You know, if you're in a KFC, which I obviously eat a lot, as you can tell by my svelte figure, you're not. You know, the KFC place does not have 10,000 gift cards sitting in there, right? I mean, they don't have any logistics. There's no way to store these cards. There's no way to administer them. There's no way to secure them. If they were going to incent you to go to that restaurant to buy menu item X, so some new product they've launched, gift cards are not an effective tool in that application, right? And even if they gave it to you, quite honestly, it'd be horrible. It'd be covered in grease and all sorts of stuff that they're famous for. Fast forward to the pays, same promotion, you know, product X, product Y, whatever it might be. First 20,000 people who go there will get $5 off. I now go to KFC, I take a receipt, just as you've done. I send a text, as long as you've got their, you know, they go to a landing page, they put it on their phone. I send that gift card to their phone, into their wallet. There it is. Right? So there's their $5 or their $10 or whatever it is. So it opens up whole new verticals for us, which is awesome. Awesome for the retailer as a means of trying to market to customers, and awesome for the person, right? Because it's a very seamless, very easy transaction. So we're pretty big on the word awesome. I can't pronounce it like the Americans would pronounce it, but we're big on it. And so hopefully that is a bit of a start of today. Obviously plenty of keynote speakers that I think will probably do, will do a really good job of explaining our business through how we work with them, as well as just being informative. You know, we've worked with CoinJar since 2013, I think only 13, right? In the kind of crypto world. Crypto's now big, everyone wants to know about crypto. Been doing it for 5 years, right? but there's lots of people will, other than what we do and our technology, there's obviously plenty of questions on what's happening with crypto. There'll be plenty of questions on what's happening in the US gaming market, how that's going to unfold. The questions will be at the end, so we're going to try to get through the presentations. We'll have plenty of breaks, so people can ask anyone anything at that point in time, other than guidance, which will be tomorrow. And then, then we'll have the Q&A at the end. So with no further ado, I'm going to ask Nick Sims to come up. So Simsy, join me, mate. Managing Director of Edge. Little known fact, but in 2012, January 2012, I'm employed by EML, and I look at that stats of one customer, which was Edge. They were 90% of EML's revenue. EML's cash was running out in 90 days, and our contract with Edge was running out in 60 days. So my first thought was I better call Nick. So Nick and I were really for 6 or 7 years now, but the companies have worked together for 10 years. Nick actually agreed to a price increase, so they do happen. They basically kept EML solvent, right? That allowed us to do that capital raise in April. So really, if maybe not for this fella, you would never need this business. The business could have folded many years ago. So, Simsy, over to you, mate.
Thanks, mate. Cheers. Thank you. Goatee beard. So thanks, Tom, and thanks, Rochelle and Richard and the eMerchants team for having me here. It has been a terrific journey with eMerchants. The partnership goes back 10, 12 years. The reason we agreed to the price increase and the reason we had to re-sign that contract was that we had so many gift cards in market and it was such a fundamental piece of our business that without eMerchants continuing, we had a big hole in our business. So we had to link in, we had to do whatever it took to keep eMerchants going, because without that, we wouldn't have had a business either. So we are intertwined. We've been great partners for a long period of time, and it's been a brilliant relationship. I'm going to try and talk through how Edge uses eMerchants, because I think you'll see a lot of the promotions that we do, and you'll recognise a lot as well, and so it'll bring it to life a little bit. Did everyone download the Pays app? Is everyone sort of familiar with that technology? Sort of, mostly. So I'll just skip through. So just a quick backstory to Edge. I founded Edge 12 years ago. My founding partner is over there, and we started it with Clemenger Communications. We'd worked for Clemenger and decided there was an opportunity to build out a loyalty and rewards business for Clemenger. And back then we were out peddling all sorts of loyalty programs and rewards programs, and we found the easiest work was to get gift with purchase stuff, or incentive technology is what we call it today. So when a customer of ours like Telstra or NAB want to run a promotion, they want to acquire a new customer, they want to convert a customer, get a bigger spend. It doesn't matter whether it's a telephone, a mortgage, a health insurance contract, a box of chocolates, a box of cereal, a case of beer. They often need some sort of incentive to purchase. We call it gift with purchase. We made it a bit fancy, call it incentive technology now, but it's basically a gift with purchase. You would have seen these types of promotions in newspapers, on TV. You probably responded to them. You would have probably got a gift at some point. But this has been our niche for the last 10 years, and eMerchants has been front and centre. We think that about 1 in 5 Australians would have got some sort of gift or reward or incentive from us. We've had about 50 million claims or entries or sign-ups in that period. We've probably issued close to, I don't know, Tom, I'm guessing like 700 million to $1 billion in gift cards. And we got bought by by Village Roadshow 6 years ago because we were doing so many movie promotions. But eMerchants has been front and centre of that relationship the whole time. It's worth just quickly capping through some of these examples because I'm going to talk to them again later. But you've got the pay to shop one, which is ANZ. And it's sort of crazy, but ANZ runs a promotion with us. That one's a mortgage one, I think, where they issue a gift card via us, via eMerchants, to incentivise people to take out a credit card or mortgage with them, and they use an eMerchants/Edge gift card to do that. NAB's similar, and the NAB and the NIB one are really good examples to talk to because it'll illustrate to you later why Pays is going to be so big and where it changes. Because if you get it, there's divergence in these 3 jobs from our goals with eMerchants. When we're issuing a Fujitsu gift card that's an EFTPOS or MasterCard, we're using eMerchants. And about 2 or 3 years ago, all of our clients wanted to go digital. the digital sign up, digital entry, and so we had to give a digital reward. Movie tickets was the first one we did, and then we started issuing retailer gift cards. And so what we would do is, about 2 years ago, start aggregating a range of gift cards. So you got Rebel, iTunes, Myer, JB and Coles in this one promotion for Telstra, and we give the customer a choice of their digital gift card, because that was the easiest way of getting a broad selection of gift cards that had a broad interest and utility for customers and would drive that acquisition. But up until about a year or two ago, we're doing just solid EFTPOS and MasterCard gift cards. So it's important to sort of understand how these work, because it's going to illustrate to you why Pays will change this game again. But when we first met eMerchants, no one was doing gift cards. I'd gone to a US gift card conference or a loyalty expo, and a guy there said to me, "You've got to get into the gift card business in Australia." I flew up to Brisbane. I met with the two original founders. They didn't have many clients. They had a couple. We said, this is how we want to use gift cards. We want to put them as payouts for rewards. So when somebody buys a case of beer, they get a $20 gift card or a $10 gift card, or as a trade incentive. So the first few jobs we had was sales reps from Lion Nathan were going around with a pocket full of gift cards, and if the merchandising was done well in the bar, then the sales rep would activate the card, give it to the bar staff, and they'd get a $50 gift card as their incentive or reward. That was the first way of using the cards, and then it sort of moved into then using them as customer incentives. So we came back, we met eMerchants, started doing cards, and before we knew it, we sort of grew bigger than they did. They had trouble keeping up, but we were linked at that point. We had to keep working with them, and then Tom came along, thankfully, had a vision for the business, grew the business, and we've grown together ever since. But if you sort of understand these, I'm going to come back to how it sort of works for Pays and where it changes it. So sort of back to the eMerchants relationship. Like I said, we've probably done close to $1 billion in gift cards. Most of you would have seen the Mark Taylor promotion. So it's buy a Fujitsu air conditioner, get $200 cash back. They hammer it all the time. What happens is you buy your air conditioner, it doesn't matter where. You fill in your claim form online. We manage the claim entry process. Assuming that it's valid, you might have to upload a receipt. We validate it. We post out a Fujitsu gift card. The reason it was so effective early and still is effective is because Fujitsu love the fact that they've got their brand in the consumer wallet. So in the past, they were paying out on, we were doing bank transfers or checks back then. We come in with the card like this. We can say we can brand it up really easily for you. And so when you pay out the $200, we're going to pay it out on a Visa or EFTPOS gift card. We're going to put your brand all over it, and that will sit in the consumer's wallet for a year, and they'll constantly think of your brand when they go to buy something. So if I've just switched health insurance, or I've just bought the air conditioner, and I've got my $200 cash back from Fujitsu, I'm a bit short 1 month, I've got to buy the kids some new footy boots, I pull out my wallet, and there's a Fujitsu gift card, I buy the footy boots, and I think, wow, that was a really good purchase decision to switch to Medibank or to buy the air conditioner, and I feel good about that relationship. And our brands loved it. They loved the fact that they could extend the impact of that payout for up to a year in the wallet. And not only that, they'd pull it out and show it to somebody. And often you get feedback, that mum or dad would show it another person and they think it was a great idea, or the staff member at the sporting good outlet would process the card and go, oh, that's good, you got Fujitsu cash. And so it enabled them to sort of create this sort of brand presence with the customer way past the purchase, and that's why they loved it so much. And it applied to the trade incentives as well. I've come in, I've given the bar staff $50 for doing what I asked. The bar staff gets $50 or $100, goes out, spends it that night, but feels good about the Lion Nathan relationship, associates whatever the subsequent purchase is with the brand. And that is the key to those cards and why we were so successful with them. And if I go back, it doesn't work quite the same way here, right? And I'll link back to Pays in a sec. So, like we said, it's been a great relationship. We've been a client since 2008. No longer your biggest client, but your most loved, hopefully. But there has been in the last year or two, Edge is growing in some regards, and eMerchants is not getting the same share that it used to, because we have to try and find a way to do digital stuff, and that's why Pays is key. Just by the way, so Edge is now owned by Village Roadshow 100%. We've probably got about 60, 70 staff in Australia. And we're out sort of selling these incentives all the time. So what we're talking about, these are real client opportunities. These are our real clients. You know, we're dealing with these partners every single day. We've got to the sort of point now where we're dominant in our category, and it's just by sheer experience, you know, 10, 12 years doing this, the fact that we're owned by a publicly listed company, the fact that we've got a terrific relationship with e-merchants that, you know, gives us some value as well. And you just sort of build up a level of trust and relationship with these guys where they really don't go anywhere else. But we're talking about all sorts of brands, right? So it doesn't matter whether they're selling health insurance or credit cards or health, or Coke, Pepsi, Kellogg's, Mars, you name it. If you're selling a box of chocolates, the cereal, beer, health insurance, a new phone, it doesn't really matter to us. We'll just tier up and down the rewards based on what you can afford. And without getting too technical, a lot of the cases we look at the risk profile of the likely responses, and we can underwrite the risk as well in terms of what the total claims might look like. And that's sort of a key role that we play as well. So we can run a on-track promotion for Kellogg's. It might include a free movie ticket or a $10 gift card. It might be 10 million packs. We can work out what we think the response or claim rates will be or the entry rates will be and underwrite it for, say, $1 million or $1 a cereal box, whatever it works out to be, and take that risk away. And that's where we sort of enable programs as well. So that's why we tend to win a lot of this type of big work. So Pays is a game changer because now you've got the best of both worlds. And I know you probably think Tom's put me up this, but you know, this for us internally, we are so excited about this because this is going to change our business as well. And it's the best of both worlds for the two obvious reasons. One, this is now a branded card in a digital wallet. So Fujitsu or Kellogg's or NIB or Telstra or Medibank can still do what they want to do. They want to put the brand in the consumer's wallet. Yes, it's a digital wallet, but that has now got the Medibank logo or the Fujitsu logo, and so when I bring it out and I go and buy the kids' new footy boots or take the wife out for dinner, I'm buying it thanks to switching to Medibank, thanks to buying the phone from Telstra. And so it's meaningful for Telstra or Medibank to have that connection, to show that value. They'll tell others about it. They'll feel good about the brand, and that is the key. We can't do that currently, or we haven't been able to. And the second thing, obviously, is just the ease of delivery. You know, just be able to issue that digitally without having to send cards out, post cards, produce cards, the clunkiness of cards, all those types of things. So we've got the best of both worlds in this product. So just sort of capping through some of the different rewards we mainly use. So I'll start at this end. So we've got EFT payments. EFT payments are a pain in the arse. They're just hard to administer. They're not that cheap. And they're clunky. When you're paying out hundreds of thousands of people or tens of thousands of people, they're really hard to do. And they're expensive. We can't track where it gets spent. The link to the brand is lost. Like once that money transfers into the bank account when they've switched from one health fund to the other, it just goes into the bank account. They don't even really know the funds have come in. They might see it in their statement, but that just goes against the mortgage and it's lost. So we lose that sort of brand value. So they're painful. We lose the brand value. We can't track them. Plastic scheme cards, obviously we've loved them for years. They've been awesome for us all. But you know, we've got to post it out. We've got to produce it. It's worked for a long time to have the physical card in the wallet because that's all we had. But there is certain types of work that we just can't get because of the logistics of having to handle tens, hundreds of thousands of cards. And I'll talk about some of those a bit later. So while we love them, there is just certain limitations, certain channels you just can't do work with the physical plastic cards. And then the digital retail cards, so like those examples I've used, the NAB one there, we've had to use them because we had to make a digital program. We've had to aggregate lots of different content to give us the broadest possible appeal. It's difficult to put that on an ad or a TVC to try and say, switch and get a free e-gift card and put a range of 5 or 10 in there. And the same thing, if I'm issuing a NAB reward, or let's use the NIB example again, you switch to NIB, get your choice of reward, you take the JB Hi-Fi reward and it's a digital e-gift card. I've lost the connection again with NIB or Medibank or Fujitsu. It's now a JB Hi-Fi card. I use it at JB Hi-Fi. I lose that immediate connection and the branding in my wallet saying, thanks for buying the new Fujitsu air conditioner. And then there's certain jobs we just can't do with these because obviously the JB Hi-Fi is a closed loop card. It can only be used at JB Hi-Fi. So we can't do the types of promotions that Tom talked about with KFC, and I'll come back to some of those in more detail, but it just limits us to just a generic reward when somebody's switched. So for us, the Pays offers a clean, secure, powerful and sticky incentive solution that delivers the brand front and create Santa through the last point of claim, and it's immediate. That's the game changer here. And so I want to work through a sort of real life scenario for you because this is a current program that we have. So we have done integration at Harvey Norman's point of sale. This is Edge. And so when Harvey Norman runs a cashback program, and you'll see them, you open up any Harvey Norman catalogue or you'll see a TVC, you'll see some sort of cashback in there. In some cases, Harvey Norman's sponsoring the cashback, and in some cases it will be Sony or Samsung or LG. In some cases it's both. So you'll go into Harvey Norman, you'll see it's a $200 cashback on the purchase of a new TV. We're integrated with Harvey Norman so that when I come and make that purchase, you get your $200 gift card then and there. Now Harvey Norman is a big retailer, but it's not like a McDonald's or a KFC or a Chemist Warehouse. So they're happy to handle physical stock at the counter. So they come in, they register the claim at the point of sale through our system, they're entering the customer details, the claim's then validated straight away because they know they've made the qualifying purchase, and they hand out a physical card. The customer then comes back and collects the physical card, activates it online, and it's there ready for use. But there's only a certain amount of retailers willing to do that. The rest of them don't want to handle plastic cards at the point of sale. So we're going to walk through a real life scenario where, and I'll paint a different picture. So we've got a chemist brand, right? Think of a bulk chemist warehouse type brand. They don't want to handle hundreds of thousands of plastic cards that are, branded for one of their suppliers, say Swiss Vitamins, at their point of sale. They just refuse to do it. But they would love to run cashbacks or $10 towards your next purchase, and they would love Swiss to pay for that, and Swiss would be willing to pay for that because they want to incentivise the purchase of Swiss over Blackmores, and they also want to encourage spend against the next product. But they just don't want to facilitate that type of handling plastic cards and handling that and validating every single claim at point of sale. It's too hard. So with Pays, we can do it. With Pays, the claim's registered at the point of sale. The consumer would get a code straight away and get their $10 straight away cash back or cash towards the next purchase, and it's immediate. And so that changes the game for us in terms of the types of retailers we can do work with, the types of brands we can run incentives with, and they are ready and willing to do that. And so I'm going to illustrate how easy it is. So we're going to put a real life scenario together where somebody has just bought the TV at Harvey Norman, and we're going to give them $250 cash back. So I need somebody that's not affiliated with eMerchants or Edge, that's got a phone on and a business card on them and wants $250 cash. I'm looking for somebody that I don't know. Do you work for Edge or eMerchants? No. You got your phone on you? You got a business card? Okay. Come up, we'll get your mobile number anyway. Okay. What's your name? Erwin. Oh, terrific. Nick Erwin. How are you? So Erwin's from Lake House Capital. So Erwin has just bought a TV from Harvey Norman. He's paid $1,500 and he's going to get $250 cash back. A man over there is the customer service agent at Harvey Norman. So he's entering the claim in at the point of sale. We've got a claim process set up at point of sale with Harvey Norman already. So he can enter in the details for the claim, which would just be the customer's name, normally the model of the TV or the serial number, the purchase amount, because this will go back to whoever's sponsoring the $250. It most likely would be Sony or Samsung, say, so we've got to let them know that this is a valid claim and here are all the details. And so we enter in all the purchase details. You've got $250, you know what we're going to spend it on? I know what Tom would spend it on, but we won't say that. KFC, I was thinking if you're worried. And we're going to enter in your details, and while you're still standing there at the counter thinking about how happy you are about purchasing the new TV, you should get your $250 cash back on your phone sort of quickly. You still entering, or we're entered? Done? Come in.
Is it through message? Or
Should be just a text, yeah. I knew this was going to happen. Was it a valid claim? Did he make the right purchase? You sure? We get a lot of people try and put in a claim without, the proper details. So maybe we're just quickly validating that it's a correct TV. It's normally a handling error at Harvey Norman as opposed to a system error.
Yeah, I haven't gotten it.
The right number? Yeah. Not your little private one you use for
everyone else.
Been delivered? All right, why don't you sit back down and then when it comes through, let us know. Could you put your hand up when it comes in? It should be instant. It normally is. We did it this morning and it was perfect, wasn't it? So just sort of looking at the matrix here, down the bottom we've got the utility in terms of incentive power, and over here we've got the ease of issue. Obviously you've got cash, incentive powers here, but ease of issue is way down there because no one wants to carry cash, no one wants to hand cash. You can't trust beer sales guys with cash to go and reward trade salespeople. So on the utility, we've got open loop pays because it's quite the closest thing we can do to cash. You've also got branded FPOS and Visa gift cards up here as well. Obviously, it's close to cash, but the physical side is really difficult to issue. Retail digital gift cards, pretty easy to issue these days because they're all digital, but hey, you have to see that we have to aggregate 5, 6, 8 different cards to try and get the broadest possible appeal, so it's clunky. Electronic payments is really hard for us to issue. The appeal is broader, it's probably closer to here, but it is sometimes confusing to try and explain to the customer how they're going to get it. Movie tickets we find have pretty good appeal and are really easy to issue, but it is limited. And then we do a lot of things like wine offers. We do about $5 million in wine every year with Harvey Norman's got a wine offer they run all the time. Those guys love it, but it's really hard to do it. We've got to obviously deliver physical cases of wine to customers. And so when we're trying to construct a promotion, you can see this is going to have the broadest appeal for the broadest possible clients of ours and their customers, because we're basically selling branded cash in the customer's wallet immediately. So why I see it growing, why we see it growing, why we're so bullish on it. First is obviously migration from existing reward offers. We're out there selling these already. We have 12 sales guys out there talking to all these clients all the time. So we'll see a big migration from plastic to digital. What's probably missing there though is from digital to digital. And that is probably the biggest one. And from digital to digital, I mean that NIB promotion, we're already running it. That NAB promotion, we're already running, but we're having to use Coles or JB or Rebel Sports gift cards to satisfy that promotion. In this case, we won't be doing that. This will be a Pays digital MasterCard branded for that client, and that will replace and kill all of those retail type promotions. You got it? Hey! There you go. So there's just going to be, there'll be a little bit of cannibalisation against the plastic card, but we will be smashing all the rewards where we're using the closed loop cards because we no longer need the closed loop cards for all of our types of promotions. We'll be able to run more frequent campaigns, and I'm going to talk about a couple in a sec, but it's just so much easier for us to run the campaigns, and I'll talk you through why, but you'll see it's just going to be a lot easier for us to set up and issue a campaign because of just the readiness in market. And a lot of times we get clients, they might have some sort of issue in field that they want to address. They've got to reward customers or quickly incentivise behaviour, whether it be trade or customer. We have to go and print cards. Sometimes we've got to go and get approvals. You've got to get the cards in mark. You've got to ship the cards. The program's gone. In this case, we can execute a program so much quicker that we will just get a lot more campaigns. We'll get more spend per campaign because it'll be a lot stickier. There's other benefits. The fact that the branding sits in the card all the time creates a different type of incentive power, and the integrated apps obviously expand the utility as well. So it can be a client branded app. So you've downloaded the eMerchants branded app, but it can be a client branded app for us. So to give you an example, and I'll skip ahead a little bit, but that could be a Lion Nathan app, okay? So we might do a promotion, and they're one of our biggest clients, with Heineken, with Forex Gold. You download that app, and we deliver rewards into that app $10, $20 based on every case you purchase. You enter the code, you get $5 or $10. Right now we use BCF vouchers, Rebel Sport. We've got a promotion with Pure Blonde and 2XU. This will just be $10 into your Forex Gold app with a Forex Gold branded card for you to use over and over again. Just keep earning rewards. It might be that we send one $10 there on your birthday. Whatever it might be, we can use it that way. And it's not just Forex Gold, it's obviously all the other brands we talk to. And this is sort of going into 4. It's going to open new channels. So let's sort of quickly look at some of those. So real-time on-premise activations. We always talk about beer because beer's probably our best industry. Health insurance and beer, we're constantly doing promotions. We've never combined the two, but we did get a 2XU promotion with Pure Blonde. But the beer companies are always looking for ways to incentivise purchase, particularly on-premise, which means at a bar or pub, right? The first beer you start off with is normally the beer you stay with for the rest of the day. People aren't that loyal at that point, so if Furphy's on tap, they'll take Furphy. If it's something else, they'll take that. So we can incentivise them on that basis. But it can be that you've downloaded the Forex Gold app, that if it hits a certain temperature, that Forex Gold can push a $5 gift into your wallet to buy your first beer with when it hits 30 degrees. It can be a birthday reward. It can be you haven't used it for a while, so we're going to incentivise a new purchase. It can be that you've bought the case and you've claimed it. It could be anything like that, but we can drive sort of real-time activation, which you can't do with digital store cards. We can't do that if it's a JB card, obviously. It doesn't make sense. We can't mail out a plastic card every single time. Doesn't make sense. So this is a brand new channel and quite a big channel. It sort of flows to here as well. and I'll talk to Tom's view about KFC because it's big and it doesn't have to be KFC. It can be anybody sort of trying to try a low value product trial offer, whether it's a box of chicken or anything sort of around that value, right? If you get it, the first thing actually to note is that a lot of the companies that we deal with are franchise based, right? Even Harvey Norman. And so the point of sales aren't consistent. They're all over the place. You've got 1,000 stores in a chain. You'll find that there's like 30 different point of sales. It's a pain in the ass. So there's one common platform. There's one common rails. It's the payment rails. It's either EFTPOS, Visa or MasterCard, right? So we can talk to those rails no matter what if we're issuing these types of cards. So we kill all the issues that they've got with the franchisees and their point of sale systems. And so the other thing that's important to note, the way Edge runs promotions, the way we can work with Pays is that I can send out the code, but until you've activated the code, till you've claimed it, it's not a live card. So we can make it really cost effective for Lion Nathan to run a promotion to put 400,000 codes in market and only 40,000 people use it, and they're only paying for the 40,000. But they couldn't do that before. So we've activated this channel for them. So the same with the KFC idea. Tom's a loyal customer. It's his birthday. We want to send out a code to everybody on their birthday saying free bucket of chicken, right? So the code goes out, congratulations, you're a loyal customer, free bucket of chicken. It's a $10 KFC Pays card in their wallet, in their KFC wallet if we want. They claim it, they don't. They don't claim it, no problems. They claim it, they go and present it, they use it, they pay for the box of chicken, they feel good about it. That works out when we sort of insure it up or take the risk out of it. We can easily say that's going to cost you about $1 to make that offer every single time to a customer. And they love the idea. Now, Tom doesn't use it just because he doesn't use it, but he still gets the nice message. He feels really good about it. He does use it and he feels awesome about it. But it's going to generate so much business in those two categories just because it can't currently exist with plastic cards. They're brand new channels for us. We talked about the Swiss one. It's like the Harvey Norman one, but there's so many opportunities them in retail where a retailer like a Chemist Warehouse, they don't want to hold plastic stock at store. Harvey Norman, we're lucky that they're willing to carry all that stock. But they don't normally want to hold EFTPOS cards unloaded at store, carry any risk there. In this case, they can run all through our system, enter in the claim, deliver out the reward, $5, $10 off your next purchase, $5, $10 cash back. Doesn't have to be that, it can be higher obviously. But same thing, it opens up brand new channels. Swiss would love to run that promotion at Chemist Warehouse. And you're talking hundreds of thousands of units because it's driving loyalty for them. They're happy to pay it. They work out as a cost per unit sold. And it just facilitates this way of getting people loyal to Swiss that doesn't currently exist. And the final one is the one I've been hammering the most because it's going to be the easiest, is that this is us aggregating 10 different cards for one promotion because we don't have an easy solution. And we're doing this for NAB, but we're doing it for Medibank, and we're doing it for Bupa, we're doing it for NIB, and we're doing it for Telstra, because this is the easiest way of doing digital right now. We move those straight to a Pays card. It's easy to communicate. It goes into the Telstra wallet or the NIB wallet or our own generic one. They've got one card they can use anywhere they want. They don't have to pick. If they don't like any of these, no issue. Use it wherever you want. And it's got that client's brand on it. They love that more than anything. Every time I go to use it, when I'm buying the wife dinner, buying the kids a pair of footy boots, I'm bringing it out and I'm paying thanks to my Medibank card. The value of that is what kills it for us there. So, I hope I've made the point strong enough, but the Pays is a game changer for incentive technology space. It's a game changer for our business. It will change the way multinationals for us reward and incentivise their customers. It will be immediate in that we will make immediate impact with this business, and it will be profound because there's so many new opportunities and so quick conversion away from the retail store cards. The channels and opportunities exist. Like, this is not us inventing this or hoping we can sell it. We're selling it now. We're just selling different solutions. So the channels and opportunities are there. Our guys are ready to sell it. We've got three of our team here. They're ready to go and sell it. The good thing is the technology exists as well, and this is really coarse, but I wanted to make the point. We don't need to go to NIB and try and do a Wish card, an Iconic card, and a JB Hi-Fi card, and they don't want that either. That's us having to try and cobble something together. We overlay the Pays digital MasterCard with the NIB logo on it, can look sexy that even if we want to. It's in their wallet. It's thanks to NIB, and it trumps everything. And that's why we love Pays.
Thanks, Nick. Appreciate that. Oh, that's fine. Richard Anderson, I'm the Chief Marketing Officer at EML. Been here for, I don't know, I think shortly after Tom in 2012. And I think this next partner is someone that we met via an email. They actually contacted us, but it was something that at the time was pretty revolutionary, and actually I think still is. We had just, as Tom mentioned earlier, we had just kind of started into this foray of reloadable. Again, our only partner back then was Nick and the team at Edge, and we love those guys, but we had this vision for EML to really take it into a reloadable space. So we had just started working with, funny enough, a payday lender, and we had built a disbursement product for them. And what that disbursement product did was, pretty simply, if you were a card holder and you took a payday loan, you could get instant access to your funds. Now, at the time, for us, it was pretty revolutionary because we thought that's going to be the future of this business. If we can build a scalable product around disbursement of funds and fit that niche that people are looking for, that's what will build this business into the future. And it has. It's carried us into 2018 and will continue to carry us for years to come. So that very first product was with, again, a payday lender. We looked at that model and looked forward, and I think stumbled into gaming. I won't take away that story. I'll let Brendan tell that later. But it was really, someone had won and just wanting to get access to those funds. And again, card holder, you could get it because it was all via API. It was really easy to communicate. So there was two industries that we could really go after with this same product. So it was really about building the scalability of EML. So next one is got an email from Asher and his team. And at the time it was, Bitcoin was just coming into its own. It was getting a lot of play. This is back in 2013. Everyone and their mom wanted to have a Bitcoin exchange, and we got quite a few phone calls from some pretty interesting characters. But as we started to do due diligence into various different companies, I think Andrew and I felt instantly comfortable with Asher and his team. Just really loved their passion, really loved their infrastructure, their investment, their people. thought, if we're going to go into Bitcoin, these are the guys to go into Bitcoin with. So since then, I mean, Asher's built essentially the largest, not just Bitcoin, but currency exchange platform in Australia. He's expanding globally. And I think when we were chatting at the time, Bitcoin was maybe $600 to one, got up to 20,000 to one. It's, what is it today? About 8,000. So so from 600, and I guess the biggest thing for me at the time, and not just wanting to look into different industries and different verticals to take our solution and try to grow our different, grow that scalability of our business, but it was. Funny story, I just read Accidental Billionaire, so the Facebook story, and I thought, the number of times that people told those guys no and said, no, I'm not going to advertise with you, you're ridiculous, get out of my office, and the amount of time they spent growing that business, and now look at where that was. So to me at the time, back in 2013, I thought, I don't want to be the guy who says no to Bitcoin. So we found the right guys to partner with. 5 years later, 400,000 customers, $1.5 billion worth of exchange transactions. So it's been a great partnership. My pleasure to introduce Asher Tran.
Hi guys, my name is Asher. So when I was talking to the EML team about what's the theme of my presentation, they said innovation. And that's a word you hear all the time. Big companies, ASX 200 companies, retailers, big banks, pizza companies, say they're tech companies now, right? We're innovating. But I'm going to share with you what innovation looks in my company, how it takes shape. On a micro scale, I'm going to talk about macro scale, what innovation is doing in the payment space, some global trends around that, and I'm going to show how EML enables that in our business as well. So the year is 2013. We've just come out of a 3-month incubator program for startups in Melbourne. My co-founder, Ryan, and I are in San Francisco, pitching in Silicon Valley. The price of Bitcoin wasn't even $600, Richard. It was $127. There was a bit of traction in our platform. People were getting to like it. And we decided, what were we going to do next? So we were in this room after pitching and getting turned down many times on Sand Hill Road by investors. And we were looking at first 3 months, what's the next 3 months going to look at our business? And what happened in San Francisco was a huge argument between myself and my co-founder, Ryan. So that's how innovation begins. It's an argument, right? So 3 months in, we had a Bitcoin exchange. I was really adamant on building a digital wallet to add on to the Bitcoin exchange. I told Ryan, mobile wallets are the future. We better get onto this first. And Ryan said, no, you should go and look up EML or find a way to have a prepaid or a debit card. And so after much shouting at each other, I said, well, Ryan, you want to do it? Go and do it yourself. So I thought he would go in his room and sulk like any other 19-year-old would. But Ryan is not a normal 19-year-old. At 17, he built a margin trading platform and sold it for high 6 figures. He's on the Forbes 30 under 30 Asia list. So what you do when you get an argument with me, he went into his room and he tried to order 1,000 cards from EML. Not your normal response, but this is how it went. So Ryan tried to order 1,000 cards, and that was the very genesis of our experiment into this space. So as Nick pointed out before, plastic digital wallets, they're not mutually exclusive, but as a young company with 3 months of runway maybe, trying to look for VC investment, you had to be really concise about what you focus on building. But Ryan went ahead and tried to order the cards. So what has happened in the last 5 years? Bitcoin's obviously gone up tremendously in price, but with this argument around digital wallets and plastic around the world, how's that gone? Most notably, in China, we've seen the rise of digital wallets, and I don't have to educate you on how big this phenomenon is. It's huge. I mean, all kinds of stuff goes through these platforms, e-commerce, transportation. You're looking at social credit being delivered through these platforms. It's all-encompassing, fast-growing in this spaces. Value of transactions dwarf anything around the world. But the narrative of China's digital wallets taking over or whatever, it's just maybe a very non-nuanced view of the industry. Besides digital wallets, particularly in China, some in India, we've seen another revolution come up. But why this has succeeded in China is basically, first, they didn't have desktop banking platforms. They swapped straight to mobile, a huge leap there. Another thing as well, many infrastructure wasn't available to them. So this phenomenon was coined early on by Mark Andreessen, one of the founders of esteemed VC firm Andreessen Horowitz. Back in the day, he co-founded a little web browser called Netscape, and that's where he built his first bit of fortune. And he said, a platform is a system that can be programmed and therefore customized by outside developers, users, and in that way adapted to the countless needs and niches that platform's original developers could not possibly have contemplated. So while there has been such a bit of creativity in this space, there are other platforms around the world, and that being the card platforms. So while in Asia we've seen this propagation of digital wallets in the absence of platforms to play on, in the rest of the world, the developed world, Europe, we've seen a lot of neobanks come out, and you see that trend come back into Australia as well, as that has gained popularity overseas. Revolut, we used to share an office in London. They've since then grown tremendously. $2 billion euros in transactions a month. N26, another challenger bank from Germany. We've seen other companies like Monzo in UK, over 1 million users of the new digital bank. The platform they play on is the internet and the card schemes. So having that infrastructure has let these neobanks, fintechs to come up and play on someone else's platform. So while your central wallet might work well in a centrally planned economy, for the rest of us who are in a different economy where things are a bit more free and there's a bit of creativity to build on a card network, what you get is this. It's CoinJar, right? So you don't have to understand cryptocurrency. You don't have to like cryptocurrency, but you have to see the value we provide. We are the interface to unlocking the purchasing power of your cryptocurrency. So we allow you to buy and sell, trade cryptocurrency, send, receive payments, check your portfolio, and obviously spend and withdraw cryptocurrency wherever you like. So with that creativity, we've managed to build on the EML platform. And for my most technical slide of the day, it looks something like this. So for all you geeks out there, when you want to spend your Bitcoin, what you do is you take out your app, you look at your Bitcoin, Ethereum, Litecoin account, transfer that to your CoinJar debit card, and you walk into Woolworths and you just use it on the spot. For the user, being built around the user experience, it feels seamless, it feels instant, but there is a bit of wizardry behind this, right? So when you load up your CoinJar card, what we basically do is our CoinJar API talks to EML's web service and updates the balance of the card, reloadable prepaid card in real time. What happens is actually the funds already sit with EML. We keep afloat with them, and basically a user is able to feel the seamless experience of spending cryptocurrency, although the funds are already loaded with EML. So that's a bit of the background of what's happening. In the larger payment space, you can see how the card schemes, and more specifically EML, allows us to do this. The bank's role as the primary interface for payments is going to be diminished as payment channels become more embedded into Frank Green coffee cups, Bitcoin services, lots of experiences. So now the interface that holds the value, you don't go to your bank anymore. You just pick up a coffee cup, you pick up your CoinJar swipe card, and that's the primary interface where people engage with. So what we've done is basically take all the best products available to us, KYC onboarding by Australia Post, sign up really easily, deposit through EFT, or you walk into a news agent, hand over cash around the counter, you get it automatically on your CoinJar. Obviously, we've got our own bespoke systems. We've developed our own wallet and exchange, and we've got our own reward program with the card as well. But obviously, EML has been a long-time partner and a very crucial part of how we got here in the first place. It's been quite a journey. It's almost 6 years now doing this. We were in maybe right time, right place, but that's not with the help of all our users who keep on coming back to our platform. It's incredibly engaging, as it's pointed out earlier, and with a small amount of VC investment by both Australian and American investors, we've managed to come where we are today. Over $1.5 billion in exchange. We take an average of a 1% fee and a spread on top of that as well. And that's the main business model of our platform. Recently, we went back to our customers after 4 years of the card in the making to do some user testing sessions. So you got into the room, you asked them questions about the product and what they liked, and overwhelmingly, they loved the debit card. It was, it's still something after 4 years that is not only novel, but it's really useful to them. Cryptocurrency becomes tangible, becomes useful. It becomes, something that gets them out of a sticky situation sometimes when they need to spend something at Woolworths. And it's not just, the qualitative statements out there that really back it up. Despite, what is easing in cryptocurrency prices, this year is still a best year of the EML and CoinJar debit card. With 2 months to go left in this year, we're closing in on $16 million just transacted on the card, not including payments in and out of a digital wallet. So, that's what we've done so far, and what's next for CoinJar. So, more places outside Australia. I've recently relocated to London, just back for this conference and to check up on the office. We hope to bring our Australian solution to more places around the world. More types of digital assets. If anyone picks up the Financial Review today, I've got a write-up there where I talk about some of the new innovations in cryptocurrency, such as stable coins, which are digital assets pegged to local, for instance, US dollar-denominated cryptocurrencies, which are now all the rage now. So, lots of things that we can add in our customer experience. Bundled services. Our onboarding is the same as any other financial institution in Australia. Besides cryptocurrency services, there are many other features that our customers have requested. And the ability to bundle all that in a customer interface that's easy to use and accessible is something that we believe has made us the market leader in this space. So I've got some of my colleagues here with me today, and after the session, feel free to come up to them. They'll have the CoinJar caps on. We can show you how the interface works, how a debit card works with EML. And yeah, this is the CoinJar platform. So thanks, everyone.
Ben is CEO of Frank Green, and I think my first impression with both of them was their passion for their business, for their product, and the environment. And so, in talking to them, I couldn't help but get infected by that passion. And they really just wanted to stop the unsustainable production of single-use cups. And said, well, okay, that's great. How are you going to do that? They showed me their cup, and they said, this is going to be the revolution. This is going to be the future, and this is how people are going to buy their coffee from here forward. I said, okay, great. How does that work? So it was all about the cup, and it was all about building not just a reusable cup, but a cool reusable cup. Tom would say an awesome reusable cup. And so, as Tom mentioned earlier, don't want to take too much from them, but the number of patents they have around not just the cup itself, but the design of the cup. And so with that, it was that vision of not just a reusable cup, but again, a cool reusable cup, an awesome reusable cup that they could make payments with. So I thought, all right, how do we do that? worked out how to put a chip into the bottom of these things. Really think the rest is a bit of history, and I think we've got a lot of growth to go. They're already looking at expanding into new markets. We'll work together in Europe and in the UK, and hopefully work together in the US. So a lot of growth right here, but I think again, it's the passion these guys have behind their business. So unfortunately, Ben couldn't be here today. Ben is over in the US, which is actually fortunate for us. He's plugging away, he's selling away each and every day. And so he has created a video for us, so he's going to speak about the business and the cups. And a quick plug for Ben is he was recently just selected as one of the entrepreneurs of the year here in Australia. So great guy, very passionate about his business. Any other questions about Frank Green? Michael and his team are here. They've also got their Frank Green hats on. So over to Ben. Thanks.
I'm Benjamin Young, and I'm the CEO and founder of Frank Green.
By 2025, single-use cups in the majority of countries around the world will be banned, just like plastic bags are today. And we found that 65% of people said they would not buy a reusable cup unless it had payments in it. The Internet of Things is not a buzzword anymore, it's actually a reality, as sophisticated consumers expect more from everyday products. Coffee is the most traded micropayment in the world, with at least 3 billion coffees traded per day. And we see this growing at 10% per annum over the next 5 to 10 years. We also see the world's largest coffee brand, Starbucks, incentivizing customers by a whopping 30 pence if they bring their reusable cup and use that to get their coffee. And they also charge customers 5 pence more if they get their coffee in a single-use cup. It's a long-term partnership where we've created a world first by placing an NFC chip or payment chip into the bottom of our reusable products, so people can use them whenever they want and to pay for whatever they want around the world. We've sold tens of thousands of next-generation reusable cups and bottles. 80% of the people who purchase Frank Green activate a Frank Green Pay account, and 60% of those people use their reusable products on a daily basis. We've also proven that loyal cafe customers spend more money when using PayWave, which on average yields 30% more per customer for merchants. Success has been overwhelming. We've spent 5 years and $6 million perfecting the world's best product to make sure that they tick all of our consumers' boxes. And that's super important this day and age. You need to provide consumers with products that actually work for them. They have a fantastic global presence, and they're very strong in the markets that we desire to be strong in. They're also a one-stop shop, and their program management in terms of being able to develop a flexible, agile program work is really flexible. And it's also because of their list of program partners that we can join when we want to build out our program in the future. But to top it all off, and I would say the most important thing, they took the time to understand our consumers' needs so we can put a highly tailored program together that made the most of what the offering was. After the success of Australia, we plan to enter the UK market later this year, and that's to take advantage and capitalise on the highest conversion rates when it comes to cashless payments around the world. That's a great start, but now let's talk about America. The market in cafes is a whopping $70 billion a year, and if we were to only capture 0.05% of the total market, we'd have a $350 to $400 million payments business per annum. And if we secured a branded coffee chain, we would have a huge payments business, max up of $1 billion. Well, we're looking forward to connecting and rewarding customers like never before. Imagine a ubiquitous loyalty rewards payments platform that connects with other reward programs such as Flybys to convert unwanted points to Frank Green Pay dollars. Also imagine a merchant coalition that dynamically bids for customers' patronage by offering rewards and inducements. We also have new and disruptive technology, such as the Frank Green Pay Bag, that you can apply to competitor products to make them into payment mechanisms. We'll also extend into other markets like festivals and events to be truly disruptive. The reason why we're so proud of the partnership between EML and Frank Green is because we've already got the platforms in place to capitalise on the increasing size of the payments and big data industry, and we've also got the reusable products market growing exponentially as governments and communities start to ban the use of single-use products around the world.
And as Richard said, Ben can't join us today, but may I welcome Michael on the stage just briefly.
As many of you can see, Ben's passion for his product is second to none. Believe it or not, putting everything aside, the reason people buy this product is primarily its design, and most of you will shake your head when you see it. Most of you, when you leave here today who have never seen it before, will start noticing it in other people's hands. That's a common thing, like when you buy the car that you thought nobody else had, and then everybody on the street outside has it now. So if you haven't collected your EML cup today already, make sure you do from over there. Inside you will be able to, first you got to download the app, which you've all been told about. There's a QR code in there to scan. And on the bottom of the box, you'll find a voucher for $10, a code. Put that in, and then you can use it at the kiosks outside where all the money goes to charity. So if you don't do it, you should feel guilty. Now, after that, I'll tell you a little story very quickly. I'll be off in just a sec. I went to buy breakfast this morning, and I have a pay cup. And I was down just the cafe out the back here, a little French patisserie. And I went to pay. And I didn't have this, because normally you just show this, and it's no problem, they know where to go. And I actually said, I'd like to pay. And realizing I understood, but she didn't. So she's looking at me going, $9.50, please. I'm like, yeah, I'd just like to pay. And so she's totally confused till I realized. I said, no, I need to make a card payment. So the industry's still shifting. So when we went over to the card payment, she goes, I get that, but I still don't get it. So I walked over to the terminal, and she gave the terminal to me, and I put my cup on it. And it was another 30 seconds before I could finish the transaction, and she told everybody in the shop what just happened. So this is exciting for people. It's what people want to do. It's for those people who are taking the quick run to the gym. It's for those people who are leaving their desk and have left their wallet or the keys, or it's in their bag or whatever. And more importantly, these are actually usable outside of here today. So make sure that when you take it with you today, you realize you can continue to reload. And people don't mind. They're buying their coffees. You can buy anything with it. And in our partnership with EML, we intend to expand beyond cups, other single-use products, and other easy, usable, including digital, payable products. Okay? We'll be here today. Emily, my colleague, will be here, who's kindly wearing the hat, which is impressive. Well done, Emily. And so I'll be here for the Q&A later on today, and I'll give the stage back over. Thanks.
So what does EML do? We issue and process, don't we? Well, actually, we do a lot more than that. We actually help our partners, as you've just seen, and as you'll see in a moment, improve someone's life. I'm Rochelle. I've been CEO of the Australian business now for the last 3 years. And I've got the pleasure of introducing Adam Levine, who we launched yesterday with Impact Pay after a lot of hard work. The first time I met Adam, which was about 12 months ago, Adam certainly made a huge impact on myself. It was a bloody tough negotiation, Adam. But he'd met both Tom and Richard many, many years earlier. But the timing wasn't right back then for a partnership. So we were really, really proud when the timing was right for Adam, Regina, who also co-founded Impact Pay, to come back to EML, because people buy from people at the end of the day. And again, very, very proud that you selected us to help you issue and process and improve someone's life. I'm not going to tell you too much about Impact Pay because I couldn't do it justice, and Adam's got a wonderful deck ahead. But just to finish off with their catchphrase and their statement and what they're all about. It's about being good with money, it's about doing good with money, and it's about improving people's lives. So Adam, may you come up on stage?
I just want to be clear, I actually have another t-shirt and I have another jacket. But they all look exactly the same. I sort of try and do things a little differently, I suppose, so I'm going to apologise up front. I'm pretty direct and honest, and I think that's where a lot of the passion comes from. So please, nobody take offence in anything that I say, but it all comes from a good place. Our business is really simple. We launched it yesterday, and thanks to the magnificent efforts of EML and the team who just busted their guts for a solid, well, it was a solid 12 months, but particularly the last solid few days. But our business is really simple. I'm going to ask a question. Like when you normally, and I apologise asking this question after Frank Green, but when you normally go and buy a coffee, right, how do you normally pay for it? Just tell me. What do you do? Card. Most people tap. If you tap, put your hand up. Who taps? Correct. I want to know how many of you give to charity throughout the year. Keep your hand up. Keep your hand up. I want to know how many of you actually know where that money goes that you give to charity. A lot of hands went down. I also want to know who's sick and tired of having street chuggers, people stopping you at corners, people calling you up at home in inconvenient times. Who's sick and tired of that? Yeah, a lot of hands went back up, which I like. So the final question is, who, and I know a lot of you have, who's been involved in charitable work, who's actually tries to go out and raise funds, and at the end of the day, sit there and say, geez, that was bloody hard work, and how much money did we actually end up with in the bank? Who's gone through that process? Correct. So our business is about solving those exact same problems. We make it easy, simple for people to give, just through the tap of the card when you're going to buy your coffee, when you're going to buy your lunch, when you're going to buy your drink, when you're out with your mates, it's really easy. You get to see exactly where your money is going. You get to follow that project, and we do it at a fractional cost for the charities who are desperate to continue to raise revenue into the new world. So that is Impact Pay. We're moving society from the concept of tap and go to the concept of tap and give. And you should feel guilty if you don't do it, because you've got a choice now. So who are we? Our vision is really simple. All we want to do is discover innovative ways where we can help everybody in the world to help everybody else in the world. It's really simple. It's very similar to EML, right? They're about helping their customer. We're about helping society in general. We figure if we can make it easy for you to give every day when you're just buying coffee, when you're buying lunch, imagine the good that you can do with that money. Simple, easy. Our mission is to become the world's most trusted social impact payments platform. We've talked about platforms beforehand because the product that we've developed has multiple applications across different verticals, not just charities. But trust is really important because we overcome a massive issue that I'll talk about in a second when it comes to trust in payments. Really simple idea, yeah? You now go to pay, you've got a choice. I apologise, Westpac, but you can use your existing debit card, right? And our target market, millennial, we know 80% of millennials under the age of 30 do not have a credit card. They're averse to credit unless you're dealing with Afterpay, which is going to stuff their lives up, but that's a whole separate conversation, right? You've got a choice. You can use your Westpac debit card that does nothing for no one other than make the fat cats rich, or you can choose Impact Pay and pay exactly the same way, do exactly the same thing, but a small amount of money every time you tap goes towards a cause that you feel passionate about. So let's look at the journey, seeing as we're the most recent launch business. It's been a 10-year journey, really. And in fact, I tell a lie, it's been a 47-year journey, really, 48-year journey to get to where we are. But our background comes from financial services, legal, in particular, this journey with Flinders, which you see here in 2013, which we sold to Australian Unity. That was the first time I caught up with the EML guys. And what was really important about that is that at the time, we were looking for a payments disbursement solution for individuals that we were charged with looking after. These were people that couldn't make financial decisions for themselves. So our business was to actually make those payments and decisions for them, and we wanted a technology solution. EML was in that 2012-13, didn't quite have the solution we were looking for at that time, but we liked what they were doing. We kept that relationship going until we sort of reached out for this new opportunity. Impact Pay, we've really quickly built up the team. There's actually 2 more faces in the last 2 weeks, which we haven't had there. My co-founder, Regina, who's in the front there. Afterwards, we don't wear the caps, we're wearing the leather jackets. You can find us, so that's easy. And we've got a great advisory board as well, which is both a CEO of Kogan, Andrew Walduck, who was the head of EGM and technology at Aussie Post, so knows all about the, he built the ID facility, and Leslie Podesta, who's the CEO of one of our foundation partners. The thing about what we've built in partnership with EML is exactly the same sort of thing that other people have been talking about, is the global scalability. Because the same problem exists all around the world that we're solving here, right? And one of the key things, and I'll talk about a little bit more, that we like with EML is they've already got footprints in the markets we want to expand into. We're using the MasterCard rail system, absolutely, because that's using existing infrastructure and technology. We don't have to rebuild stuff. People understand how it works. We can integrate with retail systems, easy. Seventh Beam, 2 of the boys are here, 3 of the boys are here, who are our app developer, and they're absolute legends. And they've actually got a heap more work out of EML, I'd like to say, as a result of us, but hey, take a clip. And we're doing some really interesting research with RMIT University at the moment in terms of looking to create what we call a ubiquitous global blockchain solution for social impact payments. And that's their whole of their division there, and the head of their professor is working with us to help us scale out the technology that we've built that operates in our local markets. The real problem that we're solving with our solution, apart from the fact that it's a bloody good looking app, right, is that there are 2 key areas of payments that no one's talked about. In every key area of payment at the moment, there is a traditional, what I call, value exchange. I give you money, whether through tap or swipe, you give me a coffee. I give you cash, you give me a car, whatever it is. There are 2 key spaces where that doesn't happen. The first one is in the charity space. I give you money, I hope to God you're going to do something good with it. I never hear back from you. I don't know where it's gone. I don't know how you've spent it. The other one is government and social disbursements, which I know EML was looking at a number of years ago, but we've really honed in on this because, again, government gives you money, don't know where it goes, not quite sure how you're spending it. There's no control mechanisms, there's no delegated authorities in there. But the technology that we've built and the solution we've built in partnership with EML provides and solves for all of those. And they are massive issues. So just in, let's just look at the one down the bottom here, consumer and charity, just in Australia, people giving. This is not donation, this is not big philanthropies, big companies, you know, huge individuals, just people giving. $12.5 billion a year people are giving. In the US, that same problem is in Australian dollars, 398 billion. In the UK, 19.6 billion, right? I don't know where my money's going. I don't know where it's going. It's too hard for me to give. I don't want you stopping me at the street. I haven't got cash. Nightmare. Government disbursements. In Australia, when you look at the, just Australia, forget the US, it's too big, right, the US, but just in Australia, it's $147 billion if you include the NDIS, in terms of government paying out cash, not knowing where it's going, no trackability. These are big, big problems that we're solving here. Bringing Impact Pay to life, as I say, the journey that we've been through, live testing. We've worked really closely with EML over the period and the journey, closely with MasterCard as their chosen platform as well. They were the ones that put us onto MasterCard, to be honest. 7th Beam, as I say, 12th of November yesterday we launched. I sort of feel, it's one of those funny things, those guys that have launched a business, it's sort of like, you know, you're sort of thinking, come on, you know, this should be the best day of my, I wanted to get 9 o'clock last night, I want to go to bed, right? I was just anyway, you know, can only get better from there. I'm going to talk really quickly about some immediate adjacencies before I get into the detail of the actual product itself. Even with the product that we've created, one of the great things about the partnership with EML is that they already have experience in the retail space. Okay, so we see a massive opportunity for us to build a integrated program with retailers without having to touch the back-end POS systems. It's just through the payment platform, existing exactly the same as we heard beforehand with CoinJar, same sort of concept. But obviously what they can do is, if you've chosen a particular charity to support, that particular retailer can make the same level of support that you've given. So you can create an immediacy of relationship. You can imagine Coles standing there when you go and tap with your card and 10 cents goes to, say, Royal Children's Hospital in Sydney, and Coles say, hey, that's important to you, consumer, so I'm going to support what you do, consumer, and give 10 cents as well. Bring it down to the human level. Massive opportunity. You've got $571 billion worth of value that goes through retail tills each year in Australia. Impact pay for kids, unbelievable, right? So kids, those of you who've got kids running around, they're after school sports, in-school activities, no one's carrying cash, got to solve for that problem. There are one or two in the market that are trying to do that at the moment. But can you imagine having people sit around a table and actually have a conversation and say, hey, we want to teach you about the value of engaging with other people and supporting the rest of the community. We want to give you some money. We can download it from the parent card. They go and tap. Small amount of money goes to whichever cause it is that the family agrees. And we say the family that gives together stays together. So what's the current state of play with our current business? Primary target market is next gen, 18 to 35 traditionally at the moment. In the new year, we'll have a kids card, which will be, I think 10 up to 17. I just can't remember that. But next gen, they want to see proof that their dollar's having impact. They want control over where their money's going. They want the ability to be seen as part of a community. So it's really important everyone's on their phone. And they want a mobile-first solution as a primary method of them giving and paying. What do charities want? They want to increase donor acquisition engagement at a low cost. They want to lower the fundraising costs to make the donor dollar go further. We know 70, 80, 90 cents in every dollar that is raised from public fundraising gets lost in costs and administration. We turn that upside down with Impact Pay because our processing and transactional costs are so low, apart from the costs we get charged from EML, are so low that we can actually make sure that you know 80, 85 cents goes directly to the specific project that you give the money to. That is a 4-fold, 5-fold increase in value that's going towards the specific project. Very important. So the barriers that we see at the moment to giving are, one, people can't afford to give. So part of the solution is democratisation of giving. That's what we're providing. Doesn't matter how much you can afford to give. Even if it's 10 cents, we go as low as 10 cents. It's important that we feel that you give. It's important that, as you can see from the video, there's 577 billion of these things going on around the world. 10 cents isn't going to hurt anyone. Everybody can afford 10 cents. Lack of trust as to where the money's going. So we build this transparency into the solution. So you see for a particular project, and you'll see in a sec, you see where that money's going. You can see how much money's being collected for a project. We have a 100% use rule, as we call it, which says that you must use that money which you receive, which we hold, which in a client segregated account, we have a whole back-end solution for that. You must use that only for the project for which it's been designated. And totally unregulated growth of charities. There's 55,000 charities in Australia. Who knows what the hell they're doing, where the hell the money's going. How do I connect with them? It's a nightmare. I don't want to be stopped. I want a single source where I can go choose, allocate, tap, pay, make it easy. How we deliver for charities. It's about increasing the donor acquisition engagement. You'll see we have a whole feedback program. We have a whole engagement program, right? We have a news feed. How do we give them deeper insights into their giving? So because we own the data, essentially, from when people tap, we know where they're tapping, we know what they're tapping on, we know actually how much they're giving every time. So we actually create these giving personas, which means they can more specifically target opportunities to engage with donors that they could never otherwise do. It's a recurring revenue stream. That's the number one issue that all these charities have. I need money on an ongoing basis. These sugar hits, and there are plenty of other sites where it's a sugar hit. It's a one-to-one engagement. Once it's done, it's finished. With us, tap, done, tap, done, tap, done. We know you're going to tap basically 2.3 times a day. We know on average per month you're going to tap 72 times. We know on average that every transaction under 20 bucks, not every, it's a lot, 90% of transactions under 20 bucks are done with the tap, not cash. That's the opportunity they're trying to capture. They could never afford to stand there, rattle the tin, you know, I'm going to buy a packet of chewing gum, you know, like, oop, 10 cents please. You know, could never do it. We're launching with these amazing charity partners. It's unbelievable. We've been inundated is the answer, right? We've got 140 of these people on the go, and they just keep coming at us. It's extraordinary. We've chosen 22 to start with, because we actually didn't want just some of the big ones, and some of the big ones are the hardest ones to get through contract negotiations and stuff like that, and we are working with like the World Visions and Plan and those sort of things. But these were the ones that really understood the humanity aspect of what we're doing, and we're really easy to get on board, happy to be involved. But we've got some massive ones, Big Brother, Big Sister, YGAP, which is great, Ronald McDonald's House over in Sydney, Royal Children's Hospital in Sydney here, Classroom of Hope, Alana Madeline, some fantastic organisations. So this is sort of what the app looks like. Millennials also, as you might know, have trouble managing savings as well. So part of the value is we said we want you to use this as your everyday spend account, right? Keep your relationship with your banks. Don't change that relationship. We know it's a pain in the ass of changing banks. We don't want you to change your mortgages. What we want you to do is be able to consciously decouple from your existing bank, right? And that's very important. Right? So you fund this through linking it to your existing bank account. Same sort of thing as your ING card, whatever. You just set it up, link it across. You can pull across money on a regular basis to help you control your spend each week. So you can actually set up controlled spends, right? You can push money in. You know, it's a credit as well, direct credit in. You can then set aside savings goals, for example. What I want to save money for, electric guitar. When do I want to save by? And it will automatically, our smart savings goal aspect of the app will automatically work out how much you've got to put aside each week, and we'll pull it aside for you. And we control that at the front end through the app. Obviously from EML, all that money sits within the client system that sits in the back end, but it's segregated. And then also every time you tap, you actually get a full report of where you've tapped, what you've bought. It tells you how much you've spent and how much you donated and where that donation went. The important thing is about tracking the impact of projects in real time. So what this does is it basically says, hey, well done, Adam, you've contributed 10 cents to this particular project. The whole tribe, not a good example here, but anyway, the whole tribe has given 10 cents. So I was obviously the first person to tap, okay? And the total amount we're looking to raise for this particular project was 250 bucks. So you continuously see in real time, not just what you're giving, but what everybody else is giving to create that sense of engagement. And we're working towards fulfilling that particular goal. And as we said, Cause sets up the project, tribe members use their impact pay card to tap, you see the tribe progress, targets achieved, the balance is then transferred into a segregated client account, right? We then actually bring that project to life through our 100% use requirement. And that's a contractual obligation that each of the charities signed with us. We have the right to go in and audit them, for example, to step in. We actually have the right to step in and audit them to make sure they don't use the money for any other projects. The other thing is that we have this spotlight and we have this news feed as well. So as part of our ongoing engagement, we will provide information to you with each particular project with tailored news feeds, as you can see on the far left. There'll be crisis, so if a particular crisis comes up, we can push information out to people. You can donate through the app directly. And we also have the social share prompts. So you can invite your friends to join and engage with you and create a group of you together to try and fulfill a project. We're going through this painful process right now, the customer acquisition strategies, and we've got a number of different strategies, both earned, owned, shared and paid. We have a number of great partners that we choose to engage with. So we've got obviously the charities themselves in terms of engaging with them. We have some fantastic university affiliations with Student Edge, which is a partner of ours to go out to the universities. And we have a range of corporate partnerships as well that we're engaging with at the moment for them to look at using their cards, the Impact Pay cards, as an alternate to their corporate cards. Partnering with EML, as I sort of said, and a lot of people said the same thing, it's a one-stop shop solution for us, really easy, back-end, global, scalable footprint. It's really important for us. You can see the numbers here in Australia are interesting. In comparison to the US, they're sort of insignificant. So, you know, the opportunity, they've got the runway there for us into the US, into Europe. And they've obviously got the experience in launching and scaling reloadable card programs for us. Pays, everyone's talked about that. It's pretty simple. We're a transactional day-to-day activity payment solution. We're going to launch with cards because apart from the fact it's not integrated with Pay at the moment, the cards actually provide us some really good visualization and PR. And then we'll bring the Pays into the next year, into the new year. So I'm just going to end by showing it in action. It's a video, it'll loop a few times, but it'll actually show you how it works in real time live. So what that's showing is we go, we tap, just like a normal card. You look at your app, it'll come up with the transaction. We then got a nice little recognise, it'll recognise what type of transaction it is. You'll see the amount changing in terms of the amount the tribe gave, and you'll see that the transaction was $1.11, which included 11 cents for that particular charity. So it works real time, live. We're on Google Play Store at the moment, iOS to come. Download it, because now you have a choice, and make sure you do the right thing. Don't just tap and go. What are we going to do? Thank you.
And as Rob said a little earlier, the gifts that you've received today, whether it's the tokenised card and wallet you received this morning or Frank Green, you can use that to purchase coffee today, and you can use it anywhere else, MasterCard or in the cups instance, Visa's accepted. But all the money today goes to one of Adam and Regina Impact Pay's chosen charities to raise money for the Sydney Children's Hospital Fund. So all for a fantastic cause. I'm now going to invite up on stage Amy, and I'll soon invite up Heidi as well. It wouldn't be a conference without, in the Australian business without us talking about salary packaging. Now, for many of you, you know that the Australian business has grown 2,000% in terms of EBITDA over the last 12 months, which a lot of it has to do with the work we're now doing in the salary packaging industry. Many of our investors and brokers have seen a slide that talks about we've created one card at the front, going into a mobile app and drawing from two benefit accounts as funding sources. One is for meal and entertainment, and the other is living and expenses, which is different to what they used to have when they were serviced by the banks, where there was one card for meal and entertainment, and there was a separate card for living and expense. And if you're a doctor and you work with multiple employers, you might have had 10 cards. So again, with our solution, one card at the front, going into a mobile app, drawing from two virtual benefit accounts. One of the, and I should also say, if you didn't have enough money in your meal and entertainment account, it will draw it from the living and expense account, which Amy will talk about shortly. One of the challenges that we had was this was actually the first time for some of these customers that they actually had to pay a fee. And these customers were being charged from us on average, about $5 per benefit account per month. So Tom mentioned it before, Rob mentioned it earlier as well, and we've mentioned it many times before. One of our challenges was to make sure that this end customer could get a benefit of at least $5 per benefit account. And so we worked tirelessly with our partners to create a merchant coalition where the employees and their customers could do exactly that. So I've asked Amy to join me first of all on stage. Amy's one of our operational specialists at EML and lives and breathes salary packaging in and out every day. So I've asked Amy to actually take us through the app. Yep.
So I'm just going to demonstrate one of our salary packaging clients' app, which we've obviously integrated into. So you can easily log into the app, and as soon as you log in, you're immediately presented with the available balance that you've got on your EML card. It's also split at a benefit level there, so you can easily see which funds are allocated to which benefit. When you transact in, our system makes it really easy for you to not have to use your 2 cards. So our system picks up the merchant category code, the merchant ID, and the terminal ID where you've transacted and allocates it to the appropriate benefit. So if you're transacting at a meal and entertainment restaurant, it'll take it from that bucket before it takes it from your living expenses bucket. So Rochelle touched on the Merchant Coalition, so you can click on your local offers and see which offers we have offered to the cardholder. So the first one is the local offers. So you easily click on there and the location services picks up where you are and looks at what merchants are around you, where can you receive a discount. So when you transact with your salary packaging card, the discount is automatically applied. You don't even have to do anything. You can get $1 off every time you transact at Boost, $5 at Nando's, and there's around 729 restaurants that you can also transact at and automatically receive a discount. So you can use the map to see which are around you. So you might see that Jamie's Italian's there. Have a look at the restaurant. You can get 5% off when you transact there. And that's a massive amount if you're eating out quite a lot. So you can review the restaurant, see if that's where you want to go, get a group of friends together and say, hey, look, associate it back to the brand, the salary packaging client. I can use this card and I can easily get a discount. And then I pay the total bill. The merchant's none the wiser that I'm receiving a discount. And when I look in my transaction history, I can see that the total bill was $82. That's what the merchant's received. But by transacting with the card, I've automatically got a discount. You can see here it's a really cool example because Rochelle touched on it earlier, the need for the cardholder to have 2 cards is eliminated. I didn't have enough funds in my meal and entertainment benefit to cover the full amount. So it's taken what it can, and then our technology has pulled the remaining amount from the living expense wallet. So yeah, cool. Really cool and really easy.
And as we said a minute ago, again, one of the challenges is we needed to make sure we had at least $5 per benefit account per month for the employees to add the value. And with the offers that you just saw, we were just under. So we needed to enhance our value proposition and add even more value to the end customer. And hence, if I can invite on stage Heidi from Entertainment Publications. We now work with Entertainment Publications, largely frequent values, to try and make sure that we're adding more value back to that customer per month. And Heidi, I might get you to talk a little bit about our partnership.
Happy to. Thank you, Rochelle. For those of you I haven't said hi to yet, my name's Heidi, and I work for Entertainment Publications. Can I see a show of hands of anyone who knows what the traditional entertainment book is? Yay, look at the hands. I'm so happy to see that. So now I would like to introduce myself properly. I'm the official restaurant taste tester. So basically I go from restaurant to restaurant and try all the wine as well, you know, that sort of thing. Not really, but it is one of the challenges of the job. You can probably tell from my accent that I'm not from Sydney. I'm from Melbourne, obviously. Actually, I was lucky 25 years ago to be asked to move from our offices in Seattle, Washington, to come over and set up the first little entertainment books in Australia and New Zealand. And since then, we've opened 20 offices across the market. And I've been along for the whole journey. It's been amazing. You know, the industry has changed so much in the time. And right now, although I've been here for 25 years, when you sit in a function like the one today and you get to have a sneak peek at what the future looks like, it is awesome. So I'm thrilled to be part of this meeting and thrilled to be working with EML. We're probably the youngest partner in the room. Although we've been friends for a long time, we've been talking about these opportunities for a long time, but we're really excited that they're finally coming to fruition. Our main role in what we bring to the party is almost 4,500 restaurants and leisure activities where subscribers will be able to use their salary sacrifice program to receive significant discounts. So we're talking about a 20% discount at each of these 4,400 to be accurate, different restaurants across the country, which far outweighs their monthly subscription fee. In fact, what we're finding is that the average person is saving at least $27.50 a month. So that is far greater than their investment to be part of the program. So this bespoke dining benefits program, I think, gives a unique advantage to EML and literally can save the consumer hundreds or thousands of dollars over the course of the year, making their subscription even more relevant and valuable to them. So I think Amy's got a demonstration, have you, of the app?
Mm-hmm. So again, we've got the local offers, but this is now the show and save, so it works a bit differently. The cardholder actually has to interact with the merchant. But again, I can scroll through and easily see which offers are available to me. You can immediately see it's much larger, 20% off your bill, over 4,000 restaurants, and they also offer activities as well. So I can use the map to see what's around me. It groups, there's 2 offers up there, 3 down there, 6 down there. So I immediately look what's around me. There's 20% off at Jabiru. So then I'll search for that discount, get a group of mates together again, and go out for lunch. So I can select that. And this is a bit different in that I have to go into the offer. Once I'm ready and I'm ready to pay my bill, I click ready to redeem. The merchant's well aware of what we do and who Entertainment Book are, so they just apply the discount directly to the bill. So that way, when I then, after I've eaten and I view my transaction history, I won't see the breakdown of the discount like I did with the local offers. I'll just see the total amount that was deducted, but it's saving people a heap of money, makes it really worthwhile, and they can say to people, look, because I'm with my salary packaging provider, I've got access to all these deals. So yeah, it's really awesome.
Awesome being the operative word of the day. Thank you for that.
No worries.
Now, anyone who didn't raise their hand at the beginning when I asked if you knew what an entertainment book was, please come and see me after, and I'll tell you all about it. And I'd also like to introduce Daniel Nissen, who's here from entertainment as well. So if you have any questions, please don't hesitate to ask. Thank you. Thanks, Rochelle.
And also Amy has one of our cards, salary packaging cards with her, so you can get a discounted coffee with our Merchant Coalition salary packaging card. And again, all the money goes to the charity. So next on stage, I'd love to introduce Brandon. Brendan Thompson joined EML back in June as our Group Chief Commercial Officer. Brandon's role, apart from keeping people like myself in line, is to focus on revenue and growth opportunities across the globe. And Brandon's also responsible for our global group P&L. Brandon's background, similar to some of us, is many, many years in prepaid. Lastly, the last 10 with NetSpend Thesis in the States, who are one of the world's largest in terms of GPR programs. So Brandon joins us to share his knowledge in regards to general purpose, reloadable programs in Australia. And welcome to the stage, Brandon.
So, number 3 of the Third Americans, awesome, right? Get it out of the way, the trifecta of awesomes right there. I first want to thank everybody. This has been the presenters, the presentations, the EML team. I mean, it really has been great. It feels really good to be a part of a team this passionate and working with customers this passionate. Somewhat unique in a lot of industries, so very much appreciate it. So I have the pleasure of introducing the CEO of PointsBet, Sam Swinnell, our newest partner in gaming and our newest market, which is the US. So that announcement came out yesterday in New Jersey initially, but really great stuff. I've been to the office in Kansas City multiple times to meet with Sam's team and Nick and Johnny, and everyone there has been great to work with. I'm going to chalk that up to Sam creating a great culture with great people. A little bit on Sam's background. it was interesting. Bringing a unique set of skills to the gaming industry, like Liam Neeson and Taken, a unique set of skills. But so Sam worked at Macquarie Bank, and then also as a day job, and on the weekends and the evenings worked with a bookmaker. So he was uniquely positioned as the industry here started to flourish, of bringing both a corporate hat and a very knowledgeable insider industry hat to the game. So that continued to evolve into TomWaterhouse.com, and then wanted to, after a time there, to create his own thing with his partners, kind of getting it's a familiar concept here at EML of getting the band back together. A lot of us have worked together in the past, and I think Sam's doing that again. So with his group, which is great to see. So we're excited about the partnership, and Sam can come on up and give some background on what it looks like moving forward.
Thanks very much. I'm going to talk a lot about America and the opportunity for EML in America, and in doing so, obviously the opportunity for PointsBet as well. PointsBet, unlike your sports bets or your Ladbrokes or your Bet365s, you may not have heard a lot about in Australia, and that's quite deliberate, because PointsBet was established to build capability in Australia, but to capitalise on the American market. You might find it hard to believe, because it's been online bookmaking and betting has been around in Australia for so long, but it's only become effectively legalised in America in May this year following a Supreme Court case. So companies all around the globe, UK, Australians, where there's advanced betting markets, I suppose, are now looking for market access in America. And the difference between America and somewhere like Australian jurisdiction is you can't just go and start up a business in America. You can't just walk in and say, I'd like to apply for a betting license to run a bookmaker. You have to partner with a land-based casino or a racetrack. So there's a finite number of licenses that are able to be obtained, and getting access to that market is a matter of doing a deal with as I said, a bricks and mortar entity, a casino or a racetrack in various states of America. The other thing about America is that each state makes this decision. So it's not one national market, it's a state-by-state decision. So New Jersey can decide to legalise sports betting, Texas may decide not to legalise sports betting. So each state is a jurisdiction, which brings with it some challenges and some technology complexities. PointsBet, really, we started in March 2017, but I really think we've sort of just started this financial year. Even though we're relatively small in the Australian market, Melbourne Cup Day obviously just passed. We processed 134,000 bets, which compared to some of our bigger competitors is still relatively small. Unlike some of our competitors, our systems didn't go down, which was a great credit. Nothing worse for a punter than not being able to get a bet on Melbourne Cup Day. And our call centre lit up with clients of Sportsbet and Ladbrokes and other places. I think they rang us in error, but in the end we were trying to get them to open an account, obviously. So that was a great milestone for the business to get through Melbourne Cup Day, prove our technology. Our technology is all proprietary. Most bookmakers, they license a betting platform from a third party. That's an easy way to get to market quickly, easy way to get all the features quickly, but it's not the future as we see it in terms of building long-term value, because like a lot of industries, it's about innovation, being able to innovate with new products, better user experience, more scalable technology, and we own all our proprietary technology. So I'll click over. We launched in March 2017, as I said. We had very minimal investment in the business up until this financial year. The business from the very beginning was about America. We wanted to build the capability in Australia. Australia is a very advanced betting market. It doesn't surprise anyone in the room that Australians are mad punters. It's just the reality of the situation. And we've had a mature market here for some time. So if you want to hire good people who are experienced in the sector, who have dealt with the technology challenges, the trading challenges, the digital marketing challenges, Australia is a very good source of resources. We wanted to build that capability in Australia, but we didn't want to make Australia the focus of our business, because Australia, truthfully, is a tough market. It's taxed very highly. Competitors have been around for 20 years. very, very tough regulatory environment. So we wanted to build the capability here, and we wanted to take it to America. Now, as I said, to get into America, you have to partner with someone. And PointsBet took part in a process with a racetrack that was running what they call an RFP, and 20 of the biggest bookmakers in the world took part in that RFP. And the consultants that were running that process, there was a consultant from the UK and a consultant from America. They basically called us up at the start of the process and said, you guys are wasting your time. You're up against the biggest bookmakers in the world. You've got 45 staff in a little office in Melbourne. You've barely got any money in the bank. How you're not going to win? You're not going to win this process. I remember we worked through Easter. We prepared a 250-page RFP response. We submitted it. Consultants came back to us and said, that was pretty good actually. You've made the shortlist. So we went to New York. We presented in person. At the end of the presentation, the consultants again said, you know what, that was pretty impressive. You might be early stage, you might be relatively small, but we can see that you guys know what you're talking about, and you're in with a chance here to win this process. In the end, they handed out 2 licenses to the state of New Jersey. Now I'll talk more about the American market. And PointsBet received one of those licenses. And PointsBet, as I said at the time, was 45 staff, maybe a couple of $1 million in the bank. The other company that won the other license is a company called Paddy Power Betfair, one of the biggest bookmakers in the world. So it was us and Paddy Power and a lot of others that missed out, which was great. One thing about PointsBet is we do traditional fixed odds betting. Everyone's used to that. But we also do a product that has been in the UK, but a version of what's called spread betting. And basically, the technology works like this. If you have a bet, it doesn't matter if your football team wins by 1 point or 20 points, you win that bet. You don't get paid anymore just because they thrashed the other team. With PointsBet and what we're calling points betting, every point you win by is a multiplier of your stake. So if you put $10 down and you win by 20 points, you win 200. Okay, if you win by 5 points, you win 50. If you lose by 5 points, you lose 50. If you lose by 10 points, you lose 100. So it's like people bet for the engagement and the excitement. So if you're watching an AFL match and every goal is $60 for you because you've got $10 a point, and every goal against you is $60 against you, the engagement and the excitement you get from that type of betting is far more, far stronger than a traditional bet. If it's halfway through the third quarter and Collingwood's up by 50 points, your bet's done. There's no more engagement in that match because you've already won. But in this instance, you're like, I want to kick more goals because I want to win another $60. So the engagement and excitement. So that's a product that we're taking to the American market. No one else is doing it in America. That's proprietary technology, proprietary quants and pricing behind it. Just going back to the Australian market. The Australian market, since we launched, you couldn't have had more headwinds for a company. I knew some of these things were coming, but we didn't realise just how tough the Australian market was going to be since March 2017 when we launched. There's been new taxes. There's been lots of advertising restrictions. Obviously, as a growing bookmaker, we need to advertise to gain clients. And the easiest way to gain clients from a media perspective is to advertise during sporting events because they're your target market. You can't advertise during sporting events anymore because before a certain time, because obviously children are watching sporting events, etc., and they don't want to be inundated with TV commercials. The way to get people to open an account was to say, hey, you deposit $50, we'll give you a matching $50 bonus bet, give us a try. You can't do that anymore. You can't advertise inducements. So to really try and grow a bookmaking business in Australia is very difficult now, and so the incumbents have a big head start. There's a thing called minimum bet rule. You now have to bet professional punters to lose a certain amount. So that's fine. Professional punters, you take their bet, you use their intelligence to shape your market. It's a trading tool. But now you have to lay every professional punter to win a minimum amount. What that means is for a big bookmaker, that's a small portion of their business. If that costs them $1 million a year to losing to professional punters, hey, that's not the end of the world. But to a bookmaker starting up, that's just a fixed cost going straight out the door because the first 200 clients you sign up as a bookmaker are the 200 professional clients in Australia coming to take money off you. Credit ban. So, for big clients, they used to like betting on credit. They don't want to have to put $50,000 in an account and pay for it up front. They want to bet on a Saturday. If they win, we pay them. If they lose, they pay us. Credit got banned in February this year. So another big hit. So every headwind you could have in Australia, we've launched through basically. So it just made that task of getting started that little bit harder. Good news, I suppose, for everyone is that gambling isn't actually growing in Australia. The latest statistics just came out on October 3. Queensland government does the most comprehensive study, and gambling is flat in Australia. Poker machines are flat, casinos are down. Racing and sports betting, good for us, is the area that's growing, and not surprisingly because of obviously mobile technology and the like. So we compete in a $4.4 billion revenue market. It's about, I don't know, I think it's about a 15th the size of say, pokies and things like that. But in particular, the online area. So the TAB has a monopoly effectively on offline. They're the only ones with shops that you can go into. Some of their parts of their business, in particular their pari-mutuel betting, are in severe decline. So online growth for racing and sports is really strong. So in some ways, the macro environment, we've been through a terrible 18 months in Australia, but the macro is looking up, and further sort of strengthening that macro outlook is that there's less competitors, because this tough environment has claimed quite a few bookmakers who have exited the market, or there's been some consolidation. In Australia, we don't have online in-play betting. So what I mean by that is, once a sporting event starts, if you want to have a bet on that, you have to ring up your bookmaker. No modern consumer is ringing up to place a bet. By the time they get through and the score's changed and they don't want to have the bet anymore, it has to be instant. If you're seeing something during a football match that you find interesting and you want to back your judgment on the outcome of that, you need to be able to do it instantly. In Australia, we can't do it. In the UK, they do it, and in America, where we're going into, they do it. 80% of bets in the UK are placed after an event starts. 20% are placed before event starts. So that gives you an understanding of how big the in-play market could be. We're launching this product in America because we need it to go live in America. The good news is, I suppose, from a macro perspective in Australia, is the government is trying to make sure that consumers in Australia are protected, responsible gambling framework, tax, all their turnover obviously is taxed and the money goes to the government. So they don't want offshore bookmakers targeting Australian consumers. At the moment, they're giving an incentive for the Australian punter to bet with an offshore bookmaker, because that's where they can get their online in-play action. So at the moment, the government's got a leakage of turnover, taxes, responsible gambling framework, sports integrity. So that's another big one. We have agreements with all the racing and sporting bodies. Every bet we take, the AFL can see, the NRL can see, Australian Tennis Open can see, etc. Obviously, if there's big illegal Indian bookmakers bribing cricketers, your Hansi Cronjes affairs, etc., in years gone past, that's a challenge to sports integrity. So governments do not want Australian punters betting with illegal operators. They want them betting with legal, licensed operators. To ensure that happens, they need to bring this in Australia, because otherwise they're providing an incentive for the punter to bet offshore. So there's talk now of this coming in. That would be a positive macro for the Australian business. But the US business in particular, as I said from the start, is what's exciting for PointsBet and what's exciting for EML. So I said just before that the Australian racing and sports betting business is 4.4 billion revenue. The USA has a population of 13 times the size of Australia. Now, it's not going to be a $50 billion market, but what could it be? Some of the estimates range from sort of 9 to 20. I think that it'll be at least those sorts of levels. It'll take time. The main determinant of where the market ends up and how big it goes is basically how optimised the operating conditions are. And I've just given 3 examples here. In Nevada, where Las Vegas is seen as this betting mecca, the punting oasis basically. They only do $250 million of revenue. So Australia does 4.4 billion. They do $250 million of revenue. It's only a small population of 3 million, but they don't have digital sign up. And what I mean by that is, to open a betting account, you have to walk into a physical casino to open an account, and then you can go home and if you're on your couch watching the sport or whatnot. So it's not optimised to maximise the opportunity. And again, if I'm a consumer and I can bet with an offshore operator without having to walk into the casino, well, I'll just bet with the offshore operator. There's no reason for me to be incentivised to sign with the legal operator. New Jersey is the state that was fighting for its rights to legalise sports betting in America. They won the court case that opened up this market in America. So New Jersey now has legalised sports betting, has a population of 9 million. They do have digital sign-up. So it's just like Australia. You can sign up online, you can deposit online, etc. And it's estimated that it will be a $500 million market. PointsBet goes live in New Jersey in 2 weeks. So that's a really big occurrence for us, which I'll talk about, and EML are a key part of that. The market's only been live for a couple of months. There's only been 8 or 9 sites licensed that are live. They did 24 million revenue in September 18. So on most measures, the $500 million estimate's probably, in a mature, steady state market, is probably looking a little bit conservative, and there's a potential to go beyond. Then you've got a state like Mississippi, population of 3 million again. Nevada's doing 250 from 3 million, obviously a lot more tourists, etc. Mississippi's got a stack of casinos, but there's no mobile betting at all. So you have to go into the casino to bet, and thus that market's not going to amount to much until they bring in mobile. Again, if you think about why the states of America are legalizing sports betting, they're doing it because it's happening anyway. Consumers, sports fans are betting on their phones just like they do here, but they're doing it with illegal operators. So no jobs are being created, there's no player protection, there's no tax being collected, there's no marketing being spent in the market. So if that's the driver and the rationale as to why states legalise sports betting, well, ultimately they end up with a New Jersey model, which is mobile, and is actually going to do the job of bringing that offshore illegal turnover onshore. So while some states like Mississippi might start off with bricks and mortar only, I'm pretty sure that in time they end up with the mobile offering. And here's some states estimates. I said New Jersey 502 million, New York 1.17. So New York hasn't passed 1.17 billion. New York hasn't passed its legislation yet, but PointsBet has a deal in New York. So when New York passes its legislation, which is expected, the legislature comes back in January, they will pass the legislation. New York has a seat at the table in that, PointsBet has a seat at the table in that $1.17 billion market. As I said, there's a finite number of licenses, not just anyone can go in and start being a bookmaker in these licenses. So the deal that we got in New Jersey, it has a sister deal in New York, and again, it was that same RFP process that we took part in that gave us that activity. A couple of the other big states that are likely to come online soon, Michigan, Illinois. So you can sort of see the numbers, and if there was 10 competitors, you're talking 67 million. On average per competitor for Illinois. It's a great opportunity. The big players, you're competing with some of the biggest players in the world. So MGM and Caesars, these big casino companies, they're going to be tough competitors, but I suppose the difference with them is they have these massive casino businesses, these entertainment businesses. How important to them is sports betting in New Jersey? That's where I suppose we would hope to have an advantage. And while sports betting was illegal in America, 2 companies launched what is basically fantasy sports businesses. And DraftKings and FanDuel were the big names in fantasy. It was almost like quasi-sports betting. It was a way to get around the fact that there was no sports betting. So these companies got quite large. They'll be some of the tougher competitors that we need to outperform in those markets to succeed. So fair to say that when we were announced as winning this opportunity in New Jersey and New York when it legislates, that the industry was reasonably shocked. As I said, we had 45 staff, not much money in the bank, didn't have an office in America, we didn't have a bank account in America, didn't have any staff in America. So how did we do it? Look, it was the aim of the business from the start. From the very first capital raise I did, we had this dotted line going across to America. It was a little bit crazy because sports betting wasn't legalised in America at that time, but we were confident that the economic forces, and we weren't sure of the route of how it would get to being legalised, but because of all those things I've spoken about, that it was happening anyway, and the ability to tax it and regulate it, etc., we were confident it would happen. Believe it or not, NBA basketball is the biggest betting sport in Australia, bigger than AFL, bigger than NRL. So Australian bookmakers are already specialised in American sports. Our traders, our quants guys, etc. We live and breathe. Most 22-year-old males know more about basketball than they do AFL or NRL these days. That's just the way it is. It's on in the morning. Fox TV with games televised. If people can watch it, they get engaged in it. We have a track record of success. The guys involved in the business, we have a track record of success. We've got proprietary technology. We have the point of difference product in the points betting that I spoke about. But the main reason we got the gig and we got the opportunity through this RFP processes was this part, the commitment. The fact that from day one, this is why we had set up. We made it very clear that this is what we were focused on. No one in the industry was going to give more commitment to New Jersey or New York than PointsBet, because that, for us, that's what it's about. Australia is a proof of concept. We'll continue to sort of organically grow Australia, but when we raise $50 or $100 million, it's going into that market. That's where we're investing, and we were able to demonstrate that. I was the one that attended every meeting. I'd been going back and forth from America from middle of 2017 before the court case was even decided. I'd built up the relationship. So by the time we got to this point, that commitment had been demonstrated. And Mr. Gorell, who provided that quote there, who owns these racetracks, he's a billionaire property developer who owns a lot of commercial property in New York. Okay, I'm going to move quickly. Suffice to say that, as I said, we didn't have a bank account, we didn't have any staff, we didn't have an office. We signed that deal on July 20 and we go live at the end of this month. So to accomplish that in such a highly regulated market, challenging technology, we had to build that online in-play product that I said is not available in Australia but will be offered in America. A huge achievement. You might not know Allen Iverson, but everyone in America does. He's an 11-time NBA All-Star. We've also signed Darrelle Revis, who's an NFL star, and they're very big in the New York, New Jersey area. So for us to square those guys away already as marketing partners, again, while still trying to get live, add staff, etc., has been a great achievement. I won't talk about technology anymore other than to say that we own our technology, we've built it, all front end, all back end, all ours. So the story with EML and wagering companies like ours is reasonably well known through the relationships they've had with Ladbrokes and the like. Obviously, when punters win, that's a happy time for them and they want to spend it and celebrate and whatever they want to do with it, whether it's to buy beers on Saturday night, whether it's to buy a gift for their partner to show that, hey, I do win on the punt and here's a gift for it. In the old days, obviously, you'd submit your withdrawal, it wouldn't get processed till Monday, it'd be an EFT transfer, you get the money Tuesday. Now, they can have their win on the last race at Flemington and they can spend that money straight away. And that will be exactly the same in America, the benefits of that in terms of the branding on the card, etc. But the big thing with America is regards to getting money onto your card. So in America, because the law has just changed and it's a state by state, it's not a national law, 50% of credit card deposits into a betting account in New Jersey fail. So nothing more frustrating to a punter who's opened his account with PointsBet or whoever it may well be. He's got his credit card, he wants to put $50 in and it fails. So by having EML in the middle of that transaction and basically them loading up their EML card, which is then used for betting and or whatever they see fit for, we go from having 50% success rates to 100% success rates. In a developing market like New Jersey, where this is all brand new, that is a huge advantage, huge advantage. So we will be the first bookmaker to have an EML card. We go live at the end of the month, so EML goes live at the end of the month with us, and it's a key part of our strategy, that the ability to get money into the accounts. And for them, you know, something like this, we've had these cards in Australia for some time, where if you back a winner, you can use your card and spend it or whatever. That doesn't exist in America. This will be a massive game changer. And the other advantage, which is often touched on for the benefits of EML, is that while it gives them the ability to spend that money if they want to, it's still close enough that if they do want to go back and have a bet again, it's right there for them to do that seamlessly. Whereas obviously if the money goes into their bank account, it's that one step removed from them being able to use it for their betting again. That's the 43% respend rate that I just spoke about, that once money comes off the card, 43% of it will go back on, which obviously as the bookmaker, that's good. The client controls what they want to do. Really big thing in the New Jersey market as well is, and Australia for that matter, is the ability for cash deposits. So not everyone wants to have transactions through their bank accounts and their statements into their betting activities. The cash economy is still pretty strong. It's pretty strong in New Jersey. So the ability to get to a point where we can deposit onto the card via cash, again, we think that will give us a great advantage in the New Jersey market. Just wrapping up, so this has sort of been PointsBet's progress. We launched with our point of difference points betting product or spread betting product in March. Then we launched fixed odds racing because we had to build all these things ourselves in September 2017. Then we launched fixed odds sport in March 2018. The Supreme Court ruled in May 2018. Bang, we got a deal in July 2018. A few months later, we're going live in America in November 2018. And you know, when I sat down with the team after we got the deal, we had 43 staff, or maybe a bit more, 48 staff. We've now got 110 staff, on our way to 150 staff. We raised $24 million from our investing shareholders via a converting note. And you know, basically our strategy for America is we back ourselves in terms of our technology, our marketing capability, our trading capability, our ability to hold on to clients, know what works in this sector. We'll outperform any of our competitors in America on that front. The question we get asked is, how do you compete with the big boys? You know, they're going to come in and spend lots of money on marketing. They're really going to have a crack. Well, we are too. So it's been clear from the start that we would keep things very conservative in the Australian market as our proof of concept. But as soon as we got a start in America, we would be raising sufficient capital so that from a marketing perspective, we can compete and go hard. And so PointsBet is now progressing to a position where for up until June 30, 2018, we'd spent a total of 10 million building the business and getting started in Australia. In the 18 months after that, we will probably spend circa 120 million exploring the US market, and in particular on marketing. The size of the US market for EML and PointsBet can't be underestimated. There's a reason why their cards have been popular and successful in the Australian market. Those reasons are only stronger in the American market because of the fact that it's brand new and that there's these issues with depositing. So I think, you know, PointsBet's really well placed. We'll get lots of states. We've got lots of other states lined up where we'll be going live through 2019. And I certainly think EML is very well placed to take advantage of that opportunity as well. Thank you.
So any questions fire away on anyone's, our business or anyone else's business up here? You know, I think one of the common questions we get when we're talking to the investment community, which is that question will remain in perpetuity, but it's what drives your growth, right? I mean, how do you continue to grow your business? And we talk about a combination of organic growth being these guys, right? At the end of the day, you know, these CEOs are effectively our sales force. You know, we're a B2B company. So in some cases, we're selling to industry and to companies directly, and on most cases we're not. And we're really relying on the passion and drive and the investment of other companies to drive our growth, and that becomes, you know, in some ways, a kind of a perpetual story, right? I mean, you launch with gaming in Australia, you transfer that to the UK, you transfer that to Jersey, you transfer that to New York, California, Illinois, etc., etc. So, you know, it might be the one customer in PointsBet, but that growth continues as they expand, we expand. And so I've said many times, and I'll say it, I'll continue to say it many times, that, you know, revenue growth or GDV growth is not the thing that keeps me up at night, because hopefully you've seen, you know, when you look at the calibre of the businesses and the markets that they're in, you know, we're working with them, and they're driving a lot of our upside and growth too.
So this is a question for Sam. So just wanted to get your sort of take on your strategy for expanding into the other 5 states that legalise sports betting in the US.
Yep.
Especially any sort of obstacles in your way and sort of...
Yeah, the biggest challenge is you need a partner. So some groups like Caesars, they already have a casino in multiple states, so they have access for themselves, or MGM, they have access for themselves. But other groups like the track that we did the deal with, they don't have a sports betting capability, so they need to partner with someone like us. So there's plenty of independents, let's call them independents, smaller operators that need a partner. And you know, we believe we've got a compelling partnership sell, obviously, and you know, we've been very fortunate since we set up. So I didn't have time to touch on it, but William Hill USA is one of the bigger players in the US, and basically their best strategy person left William Hill to join us, which is another vote of confidence for us. Another RFP that we took part in was in the state of Connecticut, a tribal casino called Foxwoods Casino. We've actually found out subsequently that we won that RFP process as well, again beating out 10 other competitors. Unluckily for us and tragically, the CEO dropped dead during the process, and the head of digital who was running the process with the CEO then struggled to sell PointsBet as an earlier stage business to partner with rather than a more established company. So they've potentially have gone with someone else, but we're still in the running. But that person, who's very highly regarded across the industry, has great relationships throughout the tribal sector, he left Foxwood to join PointsBet. So there's lots of validation points that we're seeing where, if people get to hear our story and they get to speak to us, then we're very confident that we'll get deals in various states. And I'd say I'd be pretty confident. Some states, as I said, there might be 3 or 4 casinos and there are Caesars, MGM and a Boyd and you can't get in or something like that. But we're working on deals with multi-state groups as well to perhaps do something more strategically with them. But even if we have to go around and independently gain access and do deals with states, we're pretty confident we'll get our fair share. Obviously, a big proof point is going live in New Jersey. If you go live in New Jersey at the end of this month and it goes smoothly and you start acquiring clients well and proving again another credibility point, then our life's going to be much easier. If we go live with New Jersey and the app doesn't work and whatever else, well then that's going to hinder our business development efforts.
Sam, another question for you, if I can.
Talk the gaming analyst.
Popular man. So the gaming cards have done really well in Australia over the last 4 or 5 years, let's say. I'm trying to wonder if there are any structural impediments as to why that won't be replicated in the US. And the obvious one on my mind is obviously US intercharge and the fact that moving funds around in the US is a lot more costly than it is in Australia. What's your view about penetration rates for the gaming cards in the US market?
Yeah, I think I've worked on racing ADW sites in America in the past, and their banking system's pretty ordinary. Like, we have it good in Australia, how quickly and efficiently we move money around with EFT payments and online banking, etc. They call it ACH payments over there, and it's nowhere near as robust as our system. So I think on face value, the opportunity is greater because the advantage over a non-EML card system is greater. Costs, yeah. Again, though, if the advantage is greater, if the cost is slightly more, well then the motivation remains to accept the use of the card. I think it can't be underestimated in the New Jersey market initially, and this will help the immediate appeal of it, that 50% failure rate on cards. So online casinos have been live in Jersey for 2 years. They still have failure rates, like that. Online sportsbooks have been live in Jersey for a couple of months, and they're still having these 50% failure rates. So the fact that a credit card payment onto an EML card gets processed with a different transaction code than a gambling transaction means you get that 100% success rate. I'll be honest, that was that overriding driver that just said we just have to get the EML card because we can see that immediately the word will get around, and that will be very significant for us. And we have a very strong tech team. These guys obviously know what they're doing. Integration's seamless. It's very easy. So I'm pretty bullish. And to be honest, I think this is the start for this. We do have aspirations in other markets. Australia is probably the least of those markets, but less developed markets. And if you think about why a market might be less developed, it's normally because the banking system isn't so great. They haven't quite got through the smartphone penetration, all those sorts of things. There's lots of possibilities for an EML card in some more developing areas. So this is a start for us, and we think we can leverage the relationship in other markets as well.
Just to be clear on what the solution is, because so people will be familiar with the US with cannabis payments, right? So cannabis is legal in or cannabis is an industry, might be legal in 25 states and not legal in the rest. So because it's illegal federally, if you are a credit card holder of a federal bank or a bank with a federal banking license, B of A, Citigroup, Fifth Third, etc., you can't use those cards in a cannabis store, even though you could be a resident in a state where cannabis is legal and you're buying it from a regulated dispensary and what have you. You can't use that card, right? And there are people trying to solve that in that industry too. It's exactly the same in gaming. So because it's legal at a state level, I might be a resident of New Jersey, I'm a customer of a bookmaker license in Jersey, but I'm a Citibank card holder. I wouldn't be able to use that Citibank card to make a deposit to PointsBet because the gaming code is 75556 or whatever that number is. So within the world of MasterCard, that'll be blocked. We're not a gaming operator, so EML's a financial service provider, right? So if they were going to block that code, they're blocking the code for every single EFT movement in the country. So a customer with to use that same example, a B of A card will load money to us, to our site, so that money will go to our card. The funds will then go from our card to PointsBet. So it means that's the difference, and I think that'll stay, I'd say in perpetuity, but for the long haul, because there will be some states that never prohibit gaming in the US. Utah, it's in their constitution to never approve gaming because they're obviously, it's a Mormon state. There are other states that have got major prohibitions against gaming, so I don't think it will ever become federally legislated. So I think the role that we play will be the same in most markets.
Just a question for Nick. Can you give us an idea of what's the potential growth in your business from shifting from the closed loop digital cards to the open loop?
We probably do around 100 mil in open loop now. And I'd be guessing on what we do for the sort of closed loop stuff, it'd be sort of 20 to 30. I think all that would go almost, and then I think there'll be some cannibalisation of the physical, and then there'd be just the natural growth of those new channels that we talked about. So we're sort of forecasting about 50% increase in total load for us within the next sort of 12 months, but a combination of part cannibalisation of card, part churn from the digital closed loop to the new pay system, and then just the incremental opportunities that we'll get through having this system to open up new channels. Yeah. All it's all e-merchants. Yeah, it's all EML.
Sorry, say it again.
How do you accommodate 55,000 charities?
Yeah, we're not going to accommodate 55,000 charities, obviously. But the app actually enables you to categorise into different headings and different areas. And actually it's harder to get onto our platform than you'd think. There's a very rigorous diligence process that we go through. And in fact, it's interesting, two of the charities that we were dealing with that you would think would have everything under control, because we would go through the regulatory regime to get the approval, which is a pretty quick process. But as we wanted to be approved as a fundraiser, we found out their licence had expired, which meant they would been raising money without a licence. So it's actually a lot harder to get on than you'd expect. But we've sort of modelled it out so that we would have at any one point in time probably 50 what we call charities at any one time, but we'd have all these local communities. So one of the things we didn't talk about was My Community, which is another part. So charities are what you'd call registered DGRs essentially, and My Community is about your local community. So it could be your local school, your local footy club, your local church group, and whatever. And that will be a separate part, and that might be unlimited because that is more geographically based, generally speaking. So like with some of the other apps, our solution is GPS spatial location, so we know where you are when you are at any point, so you can choose the local community based upon your location. But yeah, it creates a lot of opportunity, obviously.
I think my question might have been answered then, but I just wanted to say, without using the A word, that all the passion and commitment from each of you today was fantastic, so thank you. My question was to you, Adam, which was partly answered there, but how does an NDIS charity get onto your Impact Pay?
Well, we're going through that process as we speak. We were approached by one of them. In fact, one of the big banks recommended they speak to us because they didn't have an existing system solution. And obviously at that point, we then reached out to EML to talk through, because we know that they've been looking at that space as well. And obviously with their payment solution at the back end and our front end opportunity, it creates a really nice partnership. The answer, to be perfectly honest, is it depends. So our core function at the moment would be to receive funds from the government or through trustees that would be distributing payments, and we would then allocate payments to either individuals or particular groups, be able to track those payments, report on those payments, and then put it into an accounting package that would actually push it back up to the government, and they can actually keep track of what's going on with those disbursements. So it's a closed loop system essentially, but the important thing is that we can track those payments against individuals as well as service providers, and we can control, because we have in our solution what we call delegated authority. We're the ultimate decider as to whether or not a payment is approved every time someone uses our card. So we can actually make sure that it's being used for the right service provider in accordance with the plan that's been set for that individual. Hopefully that answers the question.
I've got a question for Asher. I find our program, I understand. Crypto, I find very confusing. How do people stay in touch with all of these things? I mean, Ethereum, Ripple, Bitcoin, stablecoin. I find it really difficult to understand. So, how do people grasp where it's heading in order to decide whether they want to actually invest in it or not?
So there have been some news publications dedicated to cryptos. A lot of it through...
Are they for young people or old farts?
For both. So for younger people, very much in the influencer community, small communities, Telegram groups, chat groups are big in the crypto community. In the more established communities, you see CNBC has their own crypto TV show now.
There you go.
Many of the news networks also dedicate a segment to Alan Kohler's on TV talking about crypto prices as well. So there is coverage on all sides, and I think media has seen a place where they can play. There is definitely demand, and it's going to take time to build up the capabilities, but both traditional and new media outlets are both going into this space.
Sorry, question for Adam. Just wanted to know, in terms of the global charity companies, are you seeing some certainly interest from them in terms of you being able to offer that facility for them, or do they push back because there's some transparency now, so that people know that 80% of those things are actually going direct to the needy people and not so much to the charities?
Yeah.
And two, what do you see from a global perspective for your company next?
Great, thank you. So the answer is it's a very interesting situation. So the big globals, let's call them, like the accountants, the big four, like World Vision, Plan International, and Oxfam. I'm just looking at Regina there to remind me. They've jumped all over us, absolutely, because they're realising they're actually struggling to engage with the next level, the next generation of givers, right? They obviously, I don't think they've thought through the issue of the transparency yet. There is an organisation, which we will remain nameless, that is quite a high profile one, it's an Australian-based one, who refused to join unless we removed our, what we call 100% use rule. They didn't want to be held account for where the money was going. And this is a really big organisation that a lot of young people would have a very close affinity to. And we said, we're not compromising our philosophy on that. And we said, no, they didn't want to have any ties to how the money could be used. So we said, bad luck. And that's a hard thing to do when you're trying to build out credibility, right? But you've got to stick to your principles. In terms of the global opportunity, look, to be perfectly honest with you, sort of like in the sports betting scenario, Australia is interesting but slightly irrelevant. We're really desperate to get this just proven here in Australia in the next couple of months, and then really launch over in the US would be number one. And we know there's a big demand. The charitable giving space is huge. The challenge, I think, in the US is that the tap and go mentality is not as big as it is in Australia, but that's, who cares? Like, again, you've got a 12, 13, 14 times market space over there. So, okay, if it's not as big on the tap and go, no big deal, it's still a lot of money. And also in the UK and Europe as well. And to be honest, the EML guys are the ones who have actually come to us and sort of said, hey, you've got to start thinking about how you're going to get into these markets, and let's work together around how we can do that. Yeah, thank you.
You obviously have a very strong relationship with EML today and strong growth prospects for all your businesses. Could you talk a bit about switching costs in terms of, this is a pretty core service that they're offering, but down the track, the difficulty in replacing this for whatever reason?
To anyone or?
No.
Yeah.
So I'll answer that question, right? So I'll give you an honest answer, and I can see everyone's getting really nervous now in terms of what I'm going to say. Okay, and that's fair enough.
I'm not nervous.
No, I'll tell you the honest truth. We talked beforehand, right? The honest truth is, why would you leave an organisation that's bending over backwards to bust their guts to help you, right? A couple of cents here and there sort of is interesting but irrelevant in the bigger scheme of things. Ultimately, and I think Rochelle said this, people buy from people, and that's my philosophy anyway. We've had absolutely, and we continue to have, and we will absolutely have going forward, very robust conversations. It has to work for both parties, there's no doubt about it. The switching costs for us to move out of an EML scenario would be high, right? There's no doubt about that. Is it impossible? No, of course it's not impossible. But would we want to do it? I could see no conceivable reason at the moment, unless they really screw me over, which is not in their best interest if you think about it, to do that, right? That's the honest truth.
Look, from my perspective, I'm probably not qualified to sort of answer it at this stage because we're just starting the relationship. And I had, obviously I was aware of EML and what they'd done in the Australian market. I actually bought shares in EML, I reckon, 6 years ago. And I'm not sure if I made any money or not. But when they got the first Ladbrokes deal, because I could see the potential of the market, basically. So from our perspective, we've got a lot of things to worry about, core business things to worry about. They're the known market leader in what they do in our sector. It'll be a long time before we look at alternatives, and I'm not aware of anyone who really competes strongly in that market. Yeah.
From the Edge side, we've been client for 12 years, but and we're stuck pretty much. I hate to say it from Tom, Richard and Rochelle, but our systems are so intertwined with theirs. We're selling an integrated solution. There aren't a lot of direct competitors anyway for what we'd want. They're certainly not as sophisticated or as complete. So it makes it messy for us because we'd need to bridge things together or cover the gaps. And same thing, it's just that's not our core business. We're out there trying to sell marketing programs, and we need that back end to work. And for us to try and do colour in the bits with another provider just doesn't make sense. And so, but either way, to try and change out some of those programs that are in place is really, really tricky for us. So we try and do the right thing by each other every contract negotiation. And
12 years in.
Yeah, that's right. But it's quite integrated. And then the pacing obviously is new. There's nothing like it in the market from what we see. Revolutionise our business as well. So we're all in on that as well. So for us, we get all the benefits of it. Sometimes it's be nicer to have some manoeuvrability, but hey, we're all in, and that's the way it is. We're stuck.
You're the ideal customer, mate.
Yeah,
totally
pretty much.
Jam. But I mean, even at that point, though, I can't think of customers we've lost, over the time. But we've been talking about this for years, right? I mean, operational risk is a killer. I mean, if we launched this program in Jersey, just like we would have launched, Bet365 in the UK, if they don't work, customers give you no second chance. I mean, it's as flat out simple as that. So, the execution risk is always our customers won't find other providers if you execute. If you don't, they'll find someone really quick if there's someone out there. There's got to be a reason for them to want to go and to want to go and do it. And the other reason they'll do it is if you get lazy. I mean, it's simple. complacency kills, right? So I mean, I think since I've been here in 2012, we had physical gift cards with Edge. We then launched virtual gift cards with Edge. We've done reloadable programs with Edge. Now we're doing the pays with Edge. It'd be easy not to do any of that. I mean, building the pays, what, 500 grand? I mean, several hundred grand of development, right? I mean, you can't do any of that without Apple charging you. I'm not even going to say what they charge us, but it was 6 figures. Android are no different. Samsung are no different. I mean, these things have a cost, right? But you're investing years ahead of where you think the revenue will be. And if you don't, they'll find somebody else, right? So, I mean, it's execution risk and complacency. So we as a company are always developing programs to add value to our customers, not tomorrow, but what we think will be 2, 3, 4 years down the track. I mean, cash top-up, which we offer in Australia, so you can load cash into a gaming account at certain retail stores. We built that. It operates in it's here. I think we're probably doing 50 million a year. Possibly it might be running through that into accounts. It may never live up to expectation in Australia because people can use credit cards more readily. But what if banks put a ban on credit usage, right, for recreational punters to load their money into their gaming account? What would they do, right? Hopefully they don't do that too. But if they do that, where do people find these things? And we'll have built that. We built it 3 years ago, right? So you're building things in anticipation of how you think the regulatory environment's going. You're building it in terms of how you think customer appetites are changing. Laziness will kill you. So I think it's coffee time. Rich, Jesus, you've asked it.
You mentioned earlier, it's not just the cups. You're looking at other reusable products. What else is Frank Green looking at?
So from getting rid of single use, we're looking at bags, backpacks, bento boxes. If you haven't noticed, Frank Green's more of a brand than just a cup. The cup is, beautifully designed, and EML have done a great job of supporting us on that. And getting back to the previous question, it's almost impossible to pull out of the EML platform without destroying your product. So well done. So where we're heading with that. So what we're basically doing is we're looking across the globe and saying, where is contactless taking off? What are the single-use products that are in those markets? What sort of regulatory action is being taken in that area? And how can we then enter that market and provide that? In doing so, also providing the payment capability, because most people are carrying these things now. And so they'll be getting wristbands. We can put bands around other cups if they prefer. And we'll be taking advantage of things such as allowing people to have multiple devices all taken from the same funding source, so it's easily managed. So basically tapping into the best things of all these worlds.
First of all, I've seen hundreds of people taking pictures. I'm sure Tom isn't that good looking. So the presentations are all available on the ASX. So any of the information today is all been published this morning around about 8:30. We would love some more photos though by our media wall. So if you do want to have a photo, or you're willing to have a photo with us, please head over to the media wall. We'll get some photos as well. Final one is everybody's been telling me how breakage is going to die for the last year. We've proven today it's not going to die because you've not spent anywhere near enough on your money in your cup. So if you could spend some more money, raise some more funds for Impact Pay's chosen charity, which is Sydney Children's Hospital, that would be really fantastic to up that number, get some money off your Pays card, get some money off your Frank Green Cup. And we'd love to see some more funds raised for the Sydney Children's Hospital as well. On behalf of EML, I really would like to thank our presenters, and Tom's going to help me out, for all the time that's gone into these presentations. You've seen there's a huge amount of work into each and every single one of these presentations. This way, drop it. Everybody's taken time out of their busy days. Our media guys have been remorseless about chasing you guys up for the presentation and helping get it in the right format and exactly how they want it. We really do appreciate all of the time you've put into it. Thank you very much once more on behalf of EML. Coffee's running until 1 p.m, so if you want to hammer these guys for any more information, then feel free. They're here till 1. The other people that sort of the hidden people behind the scenes for EML at this event have been some of our partners. We couldn't have put on today without the help of a whole host of people, but including Global Payments. We've got some people here today who have newly formed a relationship with, who've done all the POS terminals for us, which allows us to collect a lot of money for the Sydney Children's Hospital. So we're proud to be working with them. Seventh Beam, who are in the audience today, Seventh Beam have been working with us extensively on some of our front ends and our apps and our portals. So we've worked really well with Seventh Beam, as have Adam with his app and several others, so that's been fantastic. And finally, and not least, is Prodigy Plus, who's our communications gurus. That's probably the best way of describing them. They do a lot of work with me on the financial results, on the ASX presentations. They've done a huge amount of work with Richard on our new branding that you've seen demonstrated here today. They've helped coordinate this event. They've worked with all of you guys on pulling your presentations together. They've been absolutely fantastic. So for Wade, Matt and Mary here today and all the team in Brisbane, thank you very much. The last thank you, and the very last one, is to all the EML staff who've been contributing to this. We've just called out some of the guys who really have put in extra hours on top of their day job in terms of pulling this event together. It's taken a huge amount of work. Probably never would have said yes, Tom, had we known how much work this is going to take. Scary. From Amy and Kate from our operations team, who've been working with on the coffee tables, they've been working the POS terminals, they've been working the Macmillan Shakespeare app for our salary packaging. Thank you. Rachel's been registering you with Noreen and making sure everyone got coffee cups as they came in. We knew everybody was. Malcolm and Karen have been running around. We've had our pregnant lady running around with a microphone. It's been crazy. Brandon, around somewhere at the back. Tom, obviously. Richard on all the creative. And Justin, who has been sweating those demos. Test it one more time. And then Rochelle as well, who's been absolutely instrumental in pulling together such a fantastic conference with all of you guys. So thank you very much. Enjoy the show, and there's some lunch at the back and some more drinks. Please take the opportunity.